But let's also talk about reducing the cost of the regulatory burden today if we can do it responsibly. There's no evidence of that in the current proposal, and I think that that may actually produce a different set of comments that would be instructive to a final proposal that I think realistically will include some increase in capital requirements. So over what time horizon do you think we would expect to either try to make the best of this foundation or go back and take a look at a new foundation and repropose it?
You know, we're going to work through it as quickly as we can and should. I will say it's more important to get it right than it is to do it fast. We're not in a hurry. But my guess is we'll work this out over the course of this year.
Yeah. Well, you know, if you take a look at the outsized cost of operational risk, the long list of concerns that I have publicly and privately expressed on the current proposal, I do think sometimes it's easier to knock down what I think is a poor foundation and build a better house. So again, just wanted to make that comment publicly. I got a question about shrinkflation. I tell you, some of these words that we come up with, but you know, President Biden's using the idea of shrinkflation and you know, chastising manufacturers for creating smaller portion sizes for potato chips. I'll use that as one example. But if you have rising input cost, and you're not able to control that, and you're in a marginal business to begin with, and now you're saying you can't even reduce the quantities, how does a business that's not making a profit make that work?
You know, I mean, we see inflation as, at the aggregate level, as a mismatch between supply and demand.
Yeah.
And as we've seen supply get better and we've seen demand cool off a bit, it was very hot coming out of the pandemic. We see inflation coming down.
We saw food inflation between 2010 and 2021 at 18% over 11 years. And over the last 3 years, we've seen it at 21%. I think that we have a industry that's trying to actually provide products that consumers want, and now they're being chastised for trying to figure out how to make the numbers work. So this whole idea of shrinkflation is just confounding to me. I'm going to submit some for the record. I want to stay on time. But I have a question. I think the chair mentioned, and if I misunderstood this, I'm sure the chair will clarify, but I thought in his opening comments, he suggested that stock buybacks and paying out dividends were a key factor in inflation. Do you, as just a matter of policy, see stock buybacks and dividends as one of the top 5 reasons we're experiencing the inflation we have right now?
First, I guess I see stock buybacks and dividends as just the same thing in a different form. And I don't know, I wouldn't comment on anything the chair even may have said.
Yeah. Well, I'd
like to avoid that.
I don't think, I'm not going to ask you about policy because I think you're consistent on that, but I just can't imagine that if we decided to outlaw stock buybacks and dividend payments, that would have a material effect on inflation. So I'm not going to ask you to respond to that, but there are some people that by inference you could assume that they think that would be helpful. I just, for one, I'm not an economist, but I just can't imagine that it would be, you know, one of the things that would make your job easier. Can you at least opine on that?
Banning stock buybacks and dividends?
Yeah.
Yeah, I think that would be quite a change in our capital markets.
Yeah, me too.
I mean, shareholders, this is just money going back to shareholders from companies that have nothing to do with it.
Okay, thank you, Mr. Chair.
Well done, Senator Tilley. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. And thank you, Chair Powell. It's great to see you here again. I appreciate your testimony. And I'm going to focus my questions on housing and housing affordability. As you have well pointed out, overall prices have moderated
listening to Fed Chairman
considerably
Jerome
since
Powell's
the Fed
testimony
began
before the
raising
U.S.
rates.
Senate Banking Committee. Speaking right now is Tina Smith, a Democrat from
resilient
Minnesota.
Or high, leaving us really no closer to addressing the affordability crisis that I think that we have, and this was there well before the pandemic. Shortly before the Fed began tightening, Chair Powell, and you came before the committee, I asked you about how higher interest rates could exacerbate this unaffordability problem that we have by making mortgages more expensive and also hindering housing development. And I think that at the time you argued that we have a excess housing demand during the pandemic, and that was kind of at the root of higher costs, and that your goal, the Fed's goal, was to bring demand closer in line with supply. So my first question is this. So the housing market has cooled significantly over the last 2 years. Is it your view that it has cooled enough so that housing supply and demand is better in balance? And following on that, given the Fed's limited tools, understanding that, at what point will you think that you've done all that you can to lower housing demand? My view is that we're well past time in Congress to take action on the housing supply side, but I'm interested in how you see this dynamic.
So we're not focused so much on housing and housing inflation. We're really focused on the aggregate, which is also goods and non-housing services. That's way more than half of the PCE inflation. There are things in the housing sector that we didn't fully anticipate. One of them just was that people in very low interest rate homes with very low interest rate mortgages aren't selling.
Right.
So the quantity of homes that's available is incredibly low, and that's why it's very little in the way of existing home sales, and that drives up existing home sale prices, but also new home sale prices. So again, there's two sets of factors. There's the longer run issue, but then there's the factors associated with the pandemic and the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer term problem of supply.
Right. I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment on a let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month. That means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market. So from where I sit, the cumulative issues of higher mortgage rates are just really a challenge. And until we can get to the bottom of that, we're going to have a hard time addressing the housing affordability challenge that we have. Would you like to comment on that?
Yes, I agree with all of that. I mean, home prices don't actually go into the calculation of inflation. It's really rents and owner's equivalent rent. But I agree, the housing market is in a very, very difficult situation. And, the sooner we can get back to price stability and restore interest rates to lower levels, the sooner it can start healing.
Yeah, thank you. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Kennedy of Louisiana is recognized.
Mr. Chairman, thank you for being here. Thank you for your services. I think I've said before, I believe you and your team probably saved the world economy during the pandemic economic meltdown when the whole world wanted dollars by establishing the currency swap line. So I thank you for that. You gave an interview, Mr. Chairman, on February 4th of this year to CBS.
All right, we're listening live to Chairman Jerome Powell's testimony before the U.S. Senate Banking Committee. Speaking right now is John Kennedy, a Republican from Louisiana.
You were asked a question about inflation, and you asked a question about prices declining. And here was your response. I'd like to quote you, if that's okay. Quote, "So the prices of some things will decline, others will go up, but we don't expect to see a decline in the overall price level. That doesn't tend to happen in economies except in very negative circumstances." End quote. Did I quote you accurately?
I believe you did.
Okay. Later in the interview, you were asked about the national debt. Do you recall that?
I don't actually, but I'm sure that's right.
Okay. Well, at least according to the transcript, your answer was, and again, I'm quoting you, in the long run, the United States is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy. So it is unsustainable, end quote. Do you remember saying that?
I've said that many times. I think that's uncontroversial.
Okay. Later in the interview, you said, I want to quote, "You know, I would just say this, integrity is priceless. And at the end, that's all you have. And we plan on keeping ours," end quote. Is that an accurate statement?
Yes, it is.
Okay. That's why I want to ask you about the FDIC. Have you read the article in the Wall Street Journal entitled, quote, "Strip clubs, lewd photos, and a boozy hotel, the toxic atmosphere at bank regulator FDIC," end quote?
I think I did read that a couple months ago.
Did you read the article entitled, I quote again, "FDIC lawyer stayed on paid leave for weeks after child porn arrest," end quote?
I don't remember that one.
Okay, did you read the article entitled, also in the Wall Street Journal, quote, "FDIC chair, known for temper, ignored bad behavior in workplace," end quote?
Honestly, I don't. I read so much, you know, I can't, I remember the broad story, but not particular stories.
Did you read the article in which a former female employee of the FDIC allegedly recalled her male colleagues saying women needed to use sex to get ahead at the FDIC?
I do not recall that, no.
Okay. Did you read the article in which a female risk management examiner during a lunch with a male examiner said she had become friendly with that examiner, and he complained to her about his marriage, allegedly, telling her he wasn't getting enough sex. And she allegedly said, quote, "Obviously, if I walked," or he allegedly said, "Obviously, if I walked into this office and you were naked, I'd fuck you right here," end quote?
I do not remember that, and I think I would.
Okay. Do you remember the article about Mr. Randall Ditch, a supervisory examiner in Denver, who allegedly was demoted in 2014 to a non-supervisory examiner position in Tulsa after having sex twice with a subordinate female employee and a number of other rule violations? In this article, it says, allegedly, Mr. Ditch had urged the woman to not, quote, "be a pussy," close quote, and drink a shot of whiskey during work hours, the records show. Do you recall that?
I do not recollect
Okay.
that. No.
Here's my question. I could go on for a while.
Could go on, but you're not going to go on. So
All right, let's get an update on these markets right here. How about that, Alex? We hit S&P 500. It's up 45 points, 0.9%. You got the Dow Jones Industrials up 0.5%, 200 points, 38,800. And the NASDAQ leading the way up 1% to 16,200 on the NASDAQ.
Yeah.
How about that?
We will return to the Senate Banking Committee.
Yes.
And Fed Chair Jay Powell. We did exit that for a moment. Senator Sherrod Brown was having a very interesting line of conversation that we weren't entirely clear what that had to do with monetary policy,
No, it was actually,
inflation, or growth. So we sort of wanted to get out of that and see what was happening in the market.
It was John Kennedy, the Republican from Louisiana, who's with that line of commentary, so line of questioning. So we'll get back to that one later on. But I'm just looking at these markets here. I'm going to call out Bitcoin, too, up 1.5%, 67,500. Looking at the yield space, I mean, we got yields kind of steady right here. 10-year Treasury, it's kind of flat at 4.11% here. So that's kind of keeping our attention there as well. Euro, because on the back of the ECB data, the euro is about 1.09 on your euro. And I like to call out the yen for Tom Keene. It is stronger today on the expectations that the Bank of Japan may raise rates. The yen's up almost about 0.8%, 148.17 on the yen.
Also, what's interesting too is you take a look at the stock market. Yes, we are higher, so there's that situation also. But Novo Nordisk, and I bring this back to the AI conversation. Novo Nordisk had a result about one of their weight loss drug pills.
Now
this
we're
would be
talking.
huge, right?
We're talking.
Because wouldn't be a shot, right? Etc. Maybe be easier to get out. Maybe it's cheaper eventually to buy or manufacture. I don't know. The jury's still out on that one. But so there's a pill form. And what I think is so interesting about this is that it's like AI in that there's the hype, but the numbers actually deliver, right? Like NVIDIA keeps coming back and delivering numbers. Novo Nordisk keeps coming back and innovating and delivering numbers, which then justifies the kind of move that we've seen in these guys.
Yeah, so there's a lot going on here still in the marketplace. But again, kind of all-time highs for the marketplace, kind of getting your attention there for sure. Right now, let's head back to the Fed Chair, Jerome Powell, his testimony before the U.S. Senate Banking Committee.
Is this the G-rated or the X-rated?
We really hope it's the G-rated.
Yeah, we really hope it's the G-rated.
If not, we'll come back and talk about Novo Nordisk again.
Yeah, absolutely. Let's go down to
Fed's
Washington right now.
path to lower inflation. So, to the continued conversation, and I know a point that you've made that about how inflation has a disproportionate impact on lower income households who are focused on spending more of their monthly budgets on housing. How is the Fed's monetary policy impacting the supply of affordable rentals?
I don't know that we're affecting the supply of affordable housing. If you think of affordable housing as something that's connected to some sort of government program, that's not our bailiwick. I mean, clearly interest rates do affect the affordability of housing, though.
And there was a key point that you made in an earlier I think reference about and in your response to Senator Smith about the monetary policy and the calculation of rents. Can you just spend just briefly talk about that? I want to have one last issue I want to get to before I run out of time.
It's hard to talk about it briefly. It's actually very conceptually challenging to think about housing inflation. Do you include the costs of financing it? Do you include the sale prices? And the answer is we don't. We convert ownership into an imputed rent, and that's 2/3 of homes are owned. And then we actually measure rents, but leases only turn over once a year. So you look at market rents, and what's happening with newly signed leases may be very different from what was happening a year ago. So it's complicated, but the good thing is we understand all that, and we look through that. We look at housing services overall as one of the three important categories, along with non-housing services and goods inflation.
Thank you for that. In the line of affordability and housing, again, sort of very general, I think, to the broad monetary policy and state of our economy and unique to California. And I raised this with Secretary Yellen when she was here as well, the insurance gaps that are presenting themselves due to the impact of climate change. Where 1 in 5 residents in California live in areas of that risk flooding, and all 58 counties have a history of flood damage. And we are seeing more and more insurance providers, home insurance providers, actually withdrawing from the state. You and I had talked a little bit about this in our preparation for today's conversation. Can you talk to me about or share with us how it is or what you think the impact might be of this sort of protection gap in insurance coverage on the overall stability of financial institutions in the broader economy?
So it is clear that insurance of various different kinds, housing insurance, but also automobile insurance and things like that, that's been a significant source of inflation over the last few years. And it's to do with a million different factors. It's nothing that we control from a regulatory or supervisory standpoint. In the longer term, companies are withdrawing from writing insurance in some coastal areas, and you got to think 10 years from now, how are you going to get housing insurance? And maybe the government will have to step in, but it's a significant issue.
Thank you, Chair Powell.
Thank you.
Senator is next. Yeah, Vance. Senator Vance of Ohio is recognized.
Thanks, Mr. Chair, and my gratitude to you and the ranking member for doing this hearing. And thank you, Chairman Powell, for being here. It's good to see you again. I think these hearings are always very important. Actually, give us an opportunity to sort of provide some oversight to what's going on at the Fed, better understand some of the things that you guys are doing.
Fed Chairman Jay Powell, he testifies before the U.S. Senate Banking Committee in Washington. Speaking right now is J.D. Vance, Republican of Ohio.
Specifically, the way that they have, there have been various proposals to sort of draw them down to focus on the regional banks. And to just go back to sort of one of the most significant crises, obviously, in our banking sector, of course, the collapse of SVB and First Republic. You and I have spoken in private and I believe in public, but one of the concerns that I have is when we talk about increasing capital requirements on the banks, if the banks were under higher capital requirements in the run-up to the crisis, there's maybe an argument that SVB, for example, would have bought more long-term treasuries, which would, of course, would have exposed their balance sheet to even more treasury bond risk. And that, of course, would have maybe hastened the collapse of SVB. And I guess I want to start here with, when we talk about, some of the Basel regulations, what was the original intent? In other words, what was the original sort of proposal for which banks would fall under those regulations and which would escape them?
You mean this time around, or I mean earlier on?
This time around.
So it's the 37 largest banks. It's down to, well, there's 4 categories of banks, including the G-SIBs, and this is down through the 4th category. The proposal that's out there now, I think, does extend to category 4 as well as 3, 2, and 1.
So what's the minimum assets under management that you guys have proposed, the current
billion.
Basel regulations?
100 billion.
100 billion.
Yeah.
And sort of that sort of gets to my concern here, because I know there's some discussion about whether you apply them at $700 billion of AUM or $100 billion of AUM. And maybe you could just sort of walk me through that decision process at the Fed, where you guys are and what would sort of justify drawing down from a $700 billion threshold to a $100 billion threshold.
So there's the G-SIBs, there's the 8 identified G-SIBs, and then there's one category too, I guess, and then there are the big regionals, and those tend to be well-known big regional banks, and they're category 3, and one of them's a 2, I guess, but they have a different tailored level of regulation. And then category 4 had significant tailoring, and the question is, we have to ask the question, since SVB was a category 4, we've got to ask the question, what, if anything, needs to be changed in the way they were regulated, supervised from a capital and liquidity standpoint. So there was tailoring all the way down, and then below 100, of course, those are community banks, and that's a different regime as well. This makes sense. We want to have a diverse banking sector. That's a great benefit to our country and very unusual for an advanced economy. So it's something we want to preserve.
Yeah, and I'm sure Chairman Powell, but just to put this on the record, I mean, a lot of the commercial lending, a lot of the real estate lending, a lot of the consumer lending, about half of that lending, consumer lending, is provided by the regional banks. I believe that Huntington, in my home state of Columbus, is the #1 SBA lender in the entire country. So these, to your point, I think these do provide incredibly important benefits to our economy. And you hear a lot of people talk about the American economic miracle, and I do wonder if part of that is because we don't have the same type of financial system that has sort of dominated in Western Europe and in other first world economies. I'm curious, in the process of amending the Basel requirements, have you guys made a decision about where to set the threshold yet, and when do you expect to set that threshold?
We haven't made any final decisions. We put out for proposals some months ago, a proposal, and we've gotten a lot of comments, as I'm sure you're aware. We're chewing through those and digesting them, and we're just beginning now to sit down and talk about the changes that will appropriately make to the original proposal.
And when do you expect to sort of issue a final proposal?
I think it's going to take some time. I think it's more important to do it right than it is to do it fast. My guess is we'll get through this and be done over the course of this year, but it could be faster than that. It could be slower than that.
So I'm wondering, just being mindful of time, I have about 30 seconds left. Would you be willing to commit to say that in the process of amending, the Fed will remove the regional bank drawdown and limit Basel's application directly to the G-SIBs or $700 billion or above?
I can't get that specific at this point, but we're clearly looking at the whole tailoring issue.
I appreciate that. And again, I just repeat, Chairman Powell, given what actually happened with the banking sector with SVB and First Republic, I just encourage you guys not to apply a regulation that doesn't actually solve the underlying problem. And I fear that if you apply this to banks of $100 billion and above, you actually are doing just that. So with that in mind, I'll yield. Thanks, Mr. Chair.
Thanks, Senator Vance. Senator Tester of Montana is recognized.
Yeah, thank you, Chairman Brown, and thank you for being here, Chair Powell. We appreciate your work in a difficult situation, but I think you've done a really good job, and so thank you for that.
All right, we're listening to Fed Chairman Jerome Powell, and he
success at the
testifies
Fed
before the U.S.
on
Senate
your
Banking
mandate for
Committee.
strong
Speaking right now is
employment,
John
stable
Tester,
prices is
Democrat
critical
from
for small
Montana.
businesses,
Quick check on the market,
on
S&P
Main Street
500
for farmers,
up
for
0.9%. That's 46
for
points,
Montana families.
5,150.
You follow all the
A new
metrics.
intraday
From your-
record, so
from your
we'll keep an eye on that.
perspective,
Let's go down to
where is the
Washington.
economy at now, and where's it going?
The economy's growing at a healthy, sustainable, solid, strong pace, and that's one thing. Second thing I'd say is the labor market is very strong and quite tight still. 3.7% unemployment for the last 24 months. That's the longest period since 50 years. And the third thing is inflation. Inflation was too high. It's come down very sharply since the beginning of last year. If you look at the 12-month number, the headline number has come down from the 5s down to 2.4. And the core number is at 2.8. I think it was at 4.9 a year ago. So these are big declines. So we're in a very different place, in a healthy place. We're going to use our tools to try to keep that strong economy, keep that strong labor market while we continue to make progress on inflation.
One of the areas where there has been inflation, and I don't exactly know where it's at now, but food rose quite rapidly. And by the way, I'm a farmer. We didn't get much of that. In fact, we didn't get any of it. Prices now compared to what they were a year ago are actually off. Compared to where they're 6 years ago, they're up. But compared to where they were a year ago, they're down. And so my question to you, Chairman Powell, is there anything you can do specifically to deal with food costs?
So as I'm telling a farmer his business, but if you look at the food cost to the consumer, part of that is commodity costs, and that was partly spiked because of Ukraine, grains and oil and that kind of thing. But the rest of it is a lot of costs in the supply chain from when it leaves the farm to get collected and processed and trucked around and then put on the shelves and then the stores. All of those costs are just part of the general economy. So as the labor market cools off from its overheated status 2 years ago, you will see, and you have seen, food inflation flattening out. And so, the really high rates of inflation have come down. Yeah. The prices, of course, have not.
Correct. I would just say that cattle's doing better. Grain actually has dropped in price at the farm gate, and I don't want to get into that debate with you at all because we probably agree, but it'd take too long, take too much time. We got other stuff to talk about.
I'd be learning from you.
You've discussed in previous hearings the impacts that the pandemic shutdowns and supply chain issues have had on economies globally. How does the U.S. economy look today compared to our competitor nations, particularly China?
Well, I start with the advanced economies. We're doing the best of anybody. We've got the strongest growth and the lowest inflation of the advanced economies. China is a whole different story. China's having significant difficulties with its economy right now, and they're in a very different place than certainly than we are.
And so, to repeat that, what I heard you say is that the economy of the United States is basically in better shape than any other economy in the world?
Any other major economy, yes.
Yes, okay. Look, one of the other challenges out there is housing in communities all across this country, whether you're in Montana, whether you're in a city in Ohio. Workforce housing in particular is a top priority, top commodity, so to speak. Plenty of folks, great organizations are working to address this. I meet them every day, and I appreciate the work they're doing. But how do these housing supplies issues show up in the data that the FOMC uses to make decisions?
So housing prices don't go into the data. Housing starts and renovations and things like that are just business activity, and that shows up. But when it comes to inflation, we convert ownership into an imputed rent, and then we look at rents. And so that's how we look at all that. So we're not directly affected by changes in housing prices, but over time those will drive rents up.
So is it fair to ask, are there economic trends that you see for housing?
Yes, so there's two big things going on. One is we have this underlying shortage of housing, and it's due to things like difficulties of zoning. A lot of the close in to cities, places are already built, and so more difficult to get zoning, more difficult to get people and materials and all that. That's one thing, and that's not going away. Then there's just a ton of things happening because of the pandemic, because of inflation, because of higher rates. And those are, in the short term, those they're weighing on the housing market. But as rates come down and that all goes through the economy, we're still going to be back to a place where we don't have enough housing.
Well, once again, thank you, Chairman Powell, for your work. I very much appreciate it. Thank you, Chairman Brown.
Thanks, Senator Tester. Senator Kramer of North Dakota.
Thank you, Mr. Chairman. Chairman Powell, good to see you. Thank you for being here. It's been a rather uneventful couple of days for you, considering you've spent 2 days in this place. And I'm not going to upset that, by the way, just so you know. But I did appreciate your response earlier to Senator Scott when he asked about immigration, when you said the Fed hasn't been assigned that.
So I want to bring up something else you haven't been assigned to. Testimony before the U.S. Senate Banking Committee in Washington, D.C. Speaking right now is Kevin Kramer, a Republican from North Dakota. In terms of the markets higher today. S&P 500 up 0.9%, 5,150.
I think is one of yours. Stay in our lane, similar to what you said probably to Senator Scott. But that said, in October, the Fed, the OCC, FDIC, issued climate guidance, as you know, for management of covered institutions. And so I'm just kind of curious, did Congress somewhere along the line give the Fed authority over climate policy as well? Or is that another one of those things that somebody just took on? And I realize you're not the dictator of the Fed, only the chairman of the Fed. But I'd be interested in, as the chairman, your views on it.
Our assignment is the safety and soundness of banks, and that they understand and can manage the risks that they face. That's our assignment. And we said in climate world, we would do two and only two things. One of them was to do illustrative stress scenarios, scenarios, not stress scenarios, climate scenarios, so that, the banks are already doing this. The large banks who are subject to this, they're already doing it because they're doing business internationally and they don't have any choice. So we said we'd do that. And we also said that we'd offer guidance on, not on the level of climate risk or anything like that, just on what you had to do to be in a position to assess. And that's, for my thinking, that's it. That's what we're doing. And we're not doing it. There are no new initiatives. We're not going to change our capital requirements to reflect climate risk or anything like that. I'm really determined that we are not a climate policymaker, and that is really the business of elected officials.
Very good, thank you. I'm going to bring up one other topic I don't know that's been brought up today, and that's central bank digital currency. I think from a lot of my friends out there, I think there's I know there's some confusion. I mean, I'm easy to confuse, but there are a lot of people that get confused about what is meant by the administration's, admonition to continue researching, experimenting, looking at some sort of central bank digital currency. I think people back home look at that and go, oh my gosh, they're going to control this now. And could you maybe just differentiate a little bit what people think of in terms of a Bitcoin or their held digital currencies versus what a central bank digital currency, who, in my view, should emulate cash, right? It still should be about the dollar, not about some different kind of currency. Could you just sort of help people back home better understand why they shouldn't be quite so frightened?
First of all, I want to say that we're nowhere near recommending or let alone adopting a central bank digital currency in any form. But the idea is that as technology has evolved, money has become digital. So, but the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how how it works in China, for example. But that's not what if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, the Federal Reserve would want, would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed. And that's the way we're going to keep it. So it's just really, it's a question of following technology as it evolves, and in a way that serves the public better. People don't need to worry about a central bank digital currency. Nothing like that is remotely close to happening anytime soon.
That was very helpful. Thank you, Mr. Chairman. Thank you, Chairman.
Kramer. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate.
Well, listen, you Fed Chairman, Fed Chair Jerome Powell testimony before the U.S. Senate Banking Committee. Speaking right now is Catherine Cortez Masto, Democrat from Nevada, S&P 500, up 0.8%, 42 points, 5,147.
Real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me say, I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have that kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time, we've been doing that. And, this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know that there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The federal home loan banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to make to get.
Paul from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Economy to overshoot when inflation was high, and we sort of made up for prior years of low inflation. I'm trying to square that with the fact that
we didn't actually do that. We adopted a framework that said we would do that, but then we got suddenly, a few months later, we got
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Last couple of decades, in 2005, it was at $800 billion. It's at $7.5 trillion today. It's doubled since the pandemic was underway. And through quantitative tapering, the Fed is attempting to reduce its footprint. And the concern I have is, on the other hand,
my general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives. in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Share the goal with Governor Waller? And if so, how long will it take us to get there?
Take a while. You know, that's an issue. We're in our FOMC meeting in a couple of weeks. We're going to have our first really deep dive on what to do with the balance sheet. That's one of the issues. I don't think we'll deal with that at this meeting, but over time, you know, you'd love not to own a lot of MBS, and I can see a case for shortening the maturity, but it's not something, you know, it's not something that would happen quickly, and you know, we're not actively looking at that. That's sort of a longer term aspiration that I think he was.
Just one final point, Mr. Chair, and you and I have talked about this before. We're in an election year. You're getting a lot of pressure, I hear, from lawmakers to adjust rates. I'm not telling you to raise rates or lower rates, but I'm just here to emphasize the fact that the credibility of the Fed depends on your remaining data-driven. The credibility of our currency as the reserve currency of the world depends on that, and I encourage you to continue to maintain that posture. Thank you.
Will do.
Thanks, Senator Haggard. Senator Warren of Massachusetts is ready.
Thank you, Mr. Chairman. So it's been a year since we had the second, third, and fourth largest
We're now
bank
listening
failures
to
in
Senator
American
Elizabeth
history.
Warren, Democrat from
Greedy
Massachusetts,
bank
at
executives
the
were part
Joe
of the
Jerome Powell
problem. The Fed,
testimony
as
before
the
the U.S.
chief
Senate Banking
regulator
Committee.
of the biggest banks, was part of the problem. Under your leadership and direction, the Fed steadily weakened rules for the biggest billionaire banks, exactly the banks that failed last March. In other words, Chair Powell, you failed to do your job to keep these big banks in line. Now, when these banks blew up, you went into spin mode, promising that the Fed would do better. After years of hemming and hawing, you finally agreed to put in place Basel III rules that would strengthen capital standards for the biggest banks. And I mean the biggest banks. These are the Fed's proposed rule would apply to only 37 of the nation's 4,500 banks, only the banks that have $100 billion or more in capital. Now, Chair Powell, when you testified before this committee last June, I asked you about taking responsibility for bank failures. And you said, quote, "The main responsibility I take is to learn the right lessons from this and to undertake to address them so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system," end quote. And as part of learning those lessons, you also said, quote, that you agree with and support, end quote, Vice Chair for Supervision Barr's recommendations for strengthening the Fed's rules and supervisory practices for the big banks, and that you're, quote, confident they will lead to a stronger and more resilient banking system, end quote. So I just want to be clear. You haven't backed down from any of your comments from a year ago, have you, Chair Powell? Right lessons, don't let this happen again, supporting Vice Chair Barr's recommendations, which include stronger capital standards.
No.
Still stand by all that?
Yes.
Good. I'm glad to hear that. Now, I understand that those 37 big banks don't like higher capital rules because they are like insurance. You know, they would make the banks safer, but they cost a little money and would nip into the bank's profits. So these 37 banks are swinging their very considerable weight around to try to weaken the capital rules. They've spent tens of millions of dollars running ads during Sunday night football, and millions more for an army of lobbyists to try to twist arms here in Congress. Impressive spending, but who exactly are they trying to impress? A man on the inside? You know, despite all you said last year when the banks failed about supporting Vice Chair Barr's recommendations to strengthen rules for big banks, public reporting now says that you are driving efforts inside the Fed to weaken the capital rule. You even told the House Financial Services Committee representatives yesterday that you think it's, quote, very plausible, close quote, that you withdraw the rule. As one analyst put it, quote, I don't think they will pass a final rule without Powell's support, suggesting that the rules will have to be weakened, quote, to appease Powell. So, Chair Powell, I'm having trouble reconciling the statements you made last year, which you say you hold on to, statements you made when the headlines were all about 3 giant bank failures, and now your reported efforts to quietly weaken the rules that would strengthen capital standards for giant banks and prevent more bank failures. So let me just give you a chance to clarify the record here. Are you committed to finalizing the strongest version of the Basel III capital rules this year?
Let me first say that we have taken and are taking many more steps to deal with the problems that revealed themselves with Silicon Valley Bank, and that's around supervision. We'll have a strong liquidity.
I appreciate that, but I'm just asking about the Basel III rules, the ones that you have been required for years now to put in place and have dragged your feet on.
The Basel III rules are not directly related. They're not the thing that is directly related to Silicon Valley Bank. As you point out, they're a longer run thing, and I would just say that we put them out for comment. We got the comments. Anybody's free to go read the comments. My view is that it will be appropriate to make material and broad changes to that before we finalize it. And in terms of, I didn't say that...
Material and broad changes to strengthen the rules?
Material and broad changes, and we're talking about what that'll mean in the end. I did not say that we would withdraw the rule. I said, there's a concept of reproposal, and I said we hadn't made a decision on that, but that if that turns out to be appropriate in the view of the Board of Governors, then that's something we would look at doing.
So everything you said a year ago about supporting the vice chair who is responsible for writing these rules?
You and I had a long colloquy.
Yes, we did.
If you read it again, it's on your website.
And I have.
You will see that I'm doing exactly what I said I would do in that colloquy.
You said you would support Vice Chair Barr to get us strong rules, and now he is putting out rules, and you're talking
Silicon Valley Bank. The Vice Chair for Supervision has every right to bring proposals to the board. That has happened, but as I made clear in our colloquy, you're not the comptroller of the currency. This is when I do monetary policy, I have one vote. There are 11 other voters, and that's the way it works. It's not different for the Vice Chair for Supervision.
You are the leader of the Fed, and when the heat was on last year, you talked a lot about getting tougher on the banks, but now the giant banks are unhappy about that, and you've gone weak-kneed on this. The American people need a leader at the Fed who has the courage to stand up to these banks and protect our financial system. Thank you, Mr. Chairman.
Warren, Senator Daines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here. Good to see you. I can tell you, Montana.
We're listening to live testimony. Fed Chairman Jerome Powell's testimony before the U.S. Senate Banking Committee. Speaking right now, Steve Daines, Republican from Montana. Some red headline crossing the tape. Just want to bring to your attention. Sweden has joined NATO, becoming its 32nd member. Markets higher today. The S&P 500 up 0.8%. Let's go back to Washington.
Political pressures you may face. Last time I checked, it's going to get a little more political around here between now and November. I'm also encouraged, contrary perhaps to my colleague from Massachusetts, I'm encouraged by your comments yesterday that there will be broad changes to the Basel III proposal, which, as it's currently proposed, would have significant detrimental impacts to credit cost and availability to small businesses. And lastly, I commend your answer yesterday that the Fed is not a climate agency, and considering the impact of climate change is not a factor in achieving your given mandate, congressional mandate, of maximum employment and stable prices. Mr. Chairman, I recently joined many of my colleagues in writing to you about my concerns about the long-term debt proposal that would mandate regional banks issue new long-term debt. I'm concerned that this will have a disproportionate impact on smaller regional banks because they're required to hold their long-term debt at both the parent holding company and insured depository bank levels. Could you explain how this aligns with the tailoring requirements set forth in the financial reform bill that we passed back in 2018, Senate Bill 2155?
So have a longer-term debt proposal aligns with that? So first of all, that's been out for comment on that one. The comments are in, we're reviewing it. So I don't want to say too much, but the theory of it in the first place was that those banks are not subject to the living will process to the extent that the GSIBs are. And this was sort of meant to be a middle step to make them more resolvable without imposing all of the burdens that we impose on the 8 GSIBs to have very elaborate resolution plans. So that was the thinking. I think on the calibration of it and all that, we have voluminous comments. We're looking at them, and we'll make an assessment and move forward as appropriate.
Well, thank you. And I know our smaller regional kind of banks would be happy to hear that thoughtful deliberation, Mr. Chairman. Understandably, you've had to raise interest rates to fight the fires of inflation brought on by reckless Democrat spending. However, a major side effect of that is the impact the rising rates are having on the cost of servicing the out-of-control national debt. Senator Haggerty alluded to this a bit in his questioning minutes ago. Looking at CBO reports, interest payments on our debt will increase 32% this year and will now exceed spending for the entire Defense Department. I have significant concerns, many do here in Washington, many Americans do, that we eventually reach a point where fiscal policy and monetary policy converge, meaning that the Fed would ultimately have to worry about the impact rate setting would have on government debt or even potentially the risk of a default. Chairman Powell, I know fiscal policy is not in your purview, but could you ever foresee a situation where fiscal irresponsibility snowballs to a point that the Fed would have to factor this into its decision-making?
I think we're a long way from that, and that's a real that's a terrible place to be. That's a place where some poorer emerging market countries have found themselves over the years. For the United States to get to that point, I think it's unlikely. But I do think that, and it's not our business, we should stay out of this fiscal business, but I'll say what other Fed chairs have said, which is we really need to get back to that discussion about fiscal sustainability. And both sides need to get together. The kinds of things that have to happen can only be done on a bipartisan basis. And so I really hope that we go back to a place where those discussions are happening again.
I've heard from a number of stakeholders about upcoming changes to liquidity regs, including a new ultra-short-term liquidity requirement. As with any policy decision, establishing the facts matters. It's important that financial regulators have a complete, thorough understanding of the financial environment before releasing a half-baked proposal, rule, or guidance. My question is, what do you believe is a sufficient time period that would allow your agency to accurately calibrate new sound and reasonable liquidity requirements?
That is a great question, and one we're struggling with, particularly with all the other things that are going on. We're looking at some, and this is in response to Silicon Valley Bank, we're looking at some liquidity innovations, and we're asking ourselves, what form should that take, and how long should it be out for comment, and that sort of thing. We're not ready to do that yet, but that's the question we're asking.
Follow-on question, then I'm finished, Mr. Chairman. Will you confirm that prior to the Federal Reserve issuing any new liquidity requirements, it will first conduct all necessary data collection that would allow for meaningful analysis of all potential policy options?
And please keep your answer short, Mr. Chairman.
Maybe. No.
That's very short. Thank you.
I can't, we can talk about this more, but I don't want to make a really specific commitment like that without talking to the people who are carefully in touch with this, but that is the right thought.
Thanks, Chairman.
Thank you, Senator Fetterman from Pennsylvania is recognized.
All right, well,
he got here
listening
last.
to Fed Chairman Jerome Powell's testimony before the U.S. Senate Banking Committee in Washington, D.C. There's some technical problems, it looks like, down there in good old Washington, D.C. So we some testimony, again, we're kind of going around. Next up is John Fetterman, Democrat of Pennsylvania. But looking at the market here, up 0.9%, 45 points, 51.50 for the Dow Jones Industrial. So a nice move here in the market. Intraday highs, Alex, and new highs.
Yes.
I think we've got the.
I think we have it.
There we go. Let's head back down to Washington, D.C. Right now we have Raphael Warnock, Democrat from
has sharply increased.
Georgia is speaking at the moment.
Interest rates are high, yet the interest being paid to depositors, ordinary working families, working people with bank accounts. Not a lot of money in Wall Street accounts remains low. Chairman Powell, I'm concerned that when banks don't increase the interest rates on bank accounts, families are losing out on dollars that could be in their pockets. Again, they don't have the kinds of portfolios that some of the folks in this room would have. Is that good for the economy? And are you concerned that banks under your supervision are doing this?
Are not paying sufficient.
That's correct.
That's a question I haven't heard. Of course, they have the option of putting their money in money market funds, and banks compete with each other. But I'll be happy to look into that. I hadn't heard that concern.
Yeah, and I think it is worth taking a look at. Many lower income individuals and families, again, they don't have some of the sophisticated products yet. Money markets are available, but we saw high interest rates and that not being reflected in what depositors are able to benefit from. Could those individuals and families benefit from a high interest rate on their deposits?
Sure. And, it's for a long time, we had a lot of mail from people at the Fed to the Fed saying, you should raise interest rates because we're not getting anything on our checking accounts. So we solved that problem.
I don't think we're asking for that, but given the reality, the question, yeah. So let me pivot. The Monetary Policy Report states that while demand for housing has fallen, a strong labor market has kept prices high. That matches what I've been seeing in Georgia. Too many folks can't afford a home. According to the Monetary Policy Report, mortgage rates were averaging around 7% last month. That's tough for lower income home buyers. Increases of just a percentage point or two can be the difference between owning a home or not. Are you concerned about this interplay between lower demand yet stubbornly high prices and what it means for folks trying to buy a home? And what do you think is driving these high prices?
So the housing market is in a very challenging situation right now. You have this longer run housing shortage, but at the same time, you've got a bunch of things that have to do with the pandemic and the inflation and our response with higher rates. So you have a shortage of homes available for sale because many people are living in homes with a very low rate mortgage that they can't afford to refinance, so they're not moving, which means the supply of regular existing homes that are for sale is historically low and very low transaction rate. That actually pushes up prices of other existing homes and also of new homes because there's just not enough supply. The builders are busy, but they're running into all kinds of supply issues still around zoning and workers and things like that. So it's quite challenging. And of course, rates are high. So people who are buying, a lot of the buyers are cash buyers or are able to actually pay without a mortgage because mortgages are expensive. I will say the first problem, the longer run problem of supply, is a longer run problem. The other problems associated with low rate mortgages and high rates and all that, those will abate as the economy normalizes and as rates normalize. But we'll still be left with a housing market nationally where there's a housing shortage.
There's no question we have a supply issue. And this issue of high prices, lack of supply, of course, disproportionately impacts some communities more than others. According to the Monetary Policy Report, the employment rate for the Black prime age labor force, that is persons between 25 and 54 years of age, reached a historical peak in 2023. The gap between Black and white prime age employment dropped to a nearly 50-year low at around 3%. We can appreciate progress, but a 3% gap is still significant. Would you agree that it is important to continue focusing on narrowing this gap? And if so, what tools does the Federal Reserve have to do this work?
It's very important, and the single best thing we can do is get prices under control, get inflation under control, so that we can have a long expansion with, the record is clear that a long expansion really gives significant benefits to people at the low end of the income spectrum, because the labor market gets very tight, inflation is low, and they benefit more than anybody. So that's where we were before the pandemic, and we'd like to get back to that place.
Thank you so very much. I think there's some other legislative tools that Congress could use, and I'm happy to continue to work with the chair in the ways that we've already done to improve that rate, that difference. Thank you.
For sure. Thank you, Senator Warnock. Senator Lamas from Wyoming.
I'm Shanali Bassick, and you've been...
Welcome. It's nice to see you, Mr. Powell. My first question is about CDBCs. There's been some chatter lately on the social media.
All right, we're listening to live testimony, Fed Chair Jerome Powell's testimony before the U.S. Senate Banking Committee. Right now, we're listening to Cynthia Lewis, Republican from Wyoming. S&P 500 up 0.9% to 5149. Let's listen in.
There are other means other than a CDBC that could use digital assets to create a secure and instant payment system other than a CDBC. So the question is this: do you still agree that the Federal Reserve cannot introduce a U.S. central bank digital currency without congressional authorization?
Yes, I do.
Thank you. That's really calms people's fears, the people who are concerned that we could end up with something like the digital yuan that is used as a means of surveillance. So I think that will calm some of those discussions down. Thank you so much. My next question is about your core CPE. Now, as you know, there's a disconnect between how you measure inflation and how the American people see inflation, because the American people are spending their money on gasoline and food and rent, things that have gone up a lot. They hear about these improvements in the economy that they're not seeing in their everyday lives. So can you explain what measures you use to evaluate inflation, and just explain to the American people why you don't factor in the things they spend money on every day, like food and gasoline?
Actually, we do. Our statutory target is inflation. It's not core inflation. So, and if you look at headline inflation over the last 12 months, that's it. That's our goal. It's 2.4%. Core inflation is actually higher than that. It's 2.8%. And the reason is that some energy and food prices have come down, and those don't count in core. So our overall legal target is headline inflation, which is, it's our best effort to capture the cost of living that people face. It's not perfect. You have to make all kinds of judgments that aren't easy. I mentioned that housing earlier. How do you measure housing inflation? Lots of issues, but that's what we target. The reason we look at core, though, is that headline inflation tends to be more volatile, and it tends to be pushed around by commodity prices, which really don't relate to the overall state of the economy. Is it tight? Is it loose? So core tends to be a better predictor of overall inflation than overall inflation is. I know that's complicated, but ultimately, though, our target is headline inflation, which does include food and energy.
Mr. Chairman, I'd like to include a letter in the record that Senator Tillis and I and two Democrats on this committee have submitted with regard to Basel III. My question...
Without objection.
Thank you very much. My question is this: what do you think is more likely, that it will be harder for consumers to buy a house and small business to obtain a loan under Basel III, or will lending just migrate outside the banking system, which may be harder to assess because it's opaque?
I'm sorry, I didn't get your question. I apologize.
Okay, so with regard to Basel III,
Yeah.
if there are more constraints on lending activity, what is more apt to be the consequence of that? That it's harder for consumers to buy a house or a small business to get a loan, or that lending just migrates outside of the traditional banking system?
So if there were anything that constricted credit in the banking system, they would probably be both things. Probably there'd be fewer loans made, but in addition, there would be non-bank lenders that are more than happy to make that loan.
I have a chicken and the egg question here. Starting with TARP in 2008, there has been a very aggressive printing of US dollars up until today, and it particularly went on hyperdrive during that 22-month period of COVID. So my question is, which comes first? Congress spending more, and so you respond by printing more money, or are they separate considerations?
I think it's hard to get my mind around that question. We don't print money to fund the deficit. That's not what happens. But when the government borrows, it issues, basically the government borrows to fund deficits is what happens.
Right. And so so that would indicate to me that you do respond, because we, in deficit spending, are creating a demand to borrow, and you're responding by.
Well, we're not making loans, though. You know, we're not lending money to the government. We're not financing these deficits.
And so there's no chicken and the egg relationship?
There's not really, no. I'd have to think about this. I got to think about the way the plumbing. Why don't we continue this?
Yeah, I'd love to. And your thoughts earlier about fiscal sustainability and how we can work with you and bipartisan, maybe next year, to address these issues. You know, when you say things, you have to be careful, because what you say has ripple effects outside of this building. But it would sure be nice if we could sit down with you on a bipartisan basis and have those discussions in a frank way.
Thank you, Senator Lummis. Senator Fetterman of Pennsylvania is recognized. All right, Senator Van Hollen of Maryland is recognized.
Let me start by thanking Senator Fetterman for his allowing me to question him. Mr. Chairman, good to see you. Real wages are up, right? That's good news. Okay.
Yes, over the last couple of years, wages have been going up more than inflation. Real wages broadly are up.
That means more families have more spending power in their budgets, right?
Yes.
Worker productivity is up, right?
Yes, it is.
Corporate profits are up, right?
I believe so.
And worker productivity is rising faster than corporate profits, right?
I don't know the answer to that. That may well be right.
The charts I show suggest that. So that would indicate that unless corporations decide to pocket as profits more of the gains they get from their workers' labor, that we should be able to continue to have increases in real wages. Is that right?
Yeah.
And so it's important, I think, that people recognize that these corporations are doing better than ever, and they are deciding now to essentially return the gains made through their workers' productivity, which is going up, more to shareholders. Obviously, shareholders are going to get a profit, but the question is whether or not workers share in that profit to the extent of their worker productivity. And as you know, we've seen a great gap over decades between rising worker productivity and real wages, and we're hoping to close that gap. Would you agree that it would be good for a more inclusive economy if worker wages tracked worker productivity increases?
I think if you include benefits, that's a significant part of that gap. I've looked into that, but not for some years. But I mean, generally speaking, people's compensation should be over time equal to increases in productivity.
I appreciate that. And I also want to, there's the trade-off on workers' wages, and there's also an issue with price gouging, right? So we have seen record profits. We've also seen very high prices these corporations are charging for things like groceries. Now, I listened to a little bit of exchange with the chairman earlier, and of course, I think your answer was, you know, people will charge what consumers will pay. But it should be known that these corporations are reaping much larger profits now than they were pre-COVID, for example, right?
I mean, some of them are. I'm not super focused on individual corporate profits, but yeah, corporate profits, I gather, have been high overall.
Right. I mean, they're high for a couple reasons. One is that they're charging consumers, for example, at the grocery stores, a lot of money. And the other would be if they're not sharing the benefits of labor productivity with their employees. So I think because we've heard a lot of claims by some of our Republican colleagues about the causes of price increases, and I think it's very important that American consumers recognize that corporations are choosing to charge them more at the grocery store or engaging in things like shrinkflation rather than in order to have more of their profits. Let me turn briefly to a letter that I sent to the Vice Chair of Supervision and some of the other federal regulators in January of this year regarding the Basel III capital requirements, and I support the overall effort on Basel. We did raise concerns with respect to a specific issue, which is the harmful and we think unnecessarily harmful impact it could have on clean energy tax credit investments. And all of the regulators testifying that day, including the vice chairman, said they recognized this was a significant issue and hope to address it. Would you agree with that?
Yes, I would.
Thank you. Thank you, Mr. Chairman. Thank you, Senator Fetterman.
Thanks, Chairman Holland. Senator Fetterman of Pennsylvania is recognized.
Yes, I love that. All right. So it's great to be here with you today. Now, I don't know, maybe some people in America were talking about a cookie that was $18. And I was alarmed, and I hope we investigate that there is a cookie that cost $18. And do you believe that an anecdote on Twitter about a cookie that cost $18, is that reflective of our economy and where we're at, or not?
I certainly hope not. I don't do much shopping these days, but that sounds like a pretty expensive cookie.
Yeah, and now, I believe that that the American economy now is the envy of the world after everything right now. Correct?
We are. Yes, we're performing very well compared to our peer group.
Yeah, pretty great. And is it fair to say that the stock markets are all up at record highs? Right?
Pretty close.
Yeah. And inflation has been pretty effectively addressed, right?
It's been coming down sharply since the middle of last year. Yes, we've got a ways to go on that, but we've made a lot of progress.
And corporate profits are pretty robust. Is that fair?
I believe it is.
Okay. Well, we can agree that, and I don't understand why more people seem to be talking about a cookie that cost $18, but that seems to be against the evidence as well. But given that, now, since things are pretty great, and we're in a really great, excuse me one second, place, But now I am concerned, and there's rumors going around that Basel, they're going to change, and they're going to reducing the capital. And I guess I'm concerned about that because I don't know why we would want to, and also I want the record to reflect on you're much smarter than I am. But I would be concerned that things are in a really great place right now. We can all agree on that. I would be concerned to change something like that because I wouldn't want to have something, again, like what happened with SVB. And I just wanted to get your take on that.
Sure. So U.S. banks are well capitalized, and generally speaking, they're quite well capitalized. And we're not talking about reducing current capital levels at all. Really, in the Basel III endgame, capital may well go up. And what we're talking about is whether the proposal that was put out by the bank regulatory agencies, including the Fed, and which has now been the subject of quite a lot of comment, whether, what changes will be appropriate to that. That's what we're talking about. We're not talking about reducing existing capital requirements.
Oh, okay. Well, and then I also want to play off of a comment made by my colleague from Tennessee, and I actually agreed with him. And he's concerned about the deficit, about it's $1 trillion for every $100 days. So now, if the federal government had added $3.5 trillion to the deficit by extending the Trump tax cuts, would that increase or decrease inflation?
So I'm going to fall back on our long-time reluctance to comment on fiscal policy. We take your fiscal policy decisions, whatever they may be, we take them as they are, and we conduct monetary policy to achieve 2% inflation. But we don't score inflation. CBO does that. They'll make a judgment on that, but it's not something we do because we're an independent agency, and that requires us to stay the heck out of politics.
So I don't want to put you on the spot, but would those kind of tax cuts, would that help addressing inflation or inflame inflation?
I don't know what the effects would be on inflation. I do know, broadly speaking, we need to get to a place where revenues and spending are better aligned, and I think everybody knows that. And I think we used to talk about this a lot 10 years ago, and we're not talking about it so much anymore. That's understandable. The pandemic was a special thing, but I do think it would be great to get back to that on a bipartisan basis.
Okay. Well, I have about 30 seconds left. I just want to go on the record. I think you've done a really great job. And I think our economy, and I do agree that it is the envy of the world as well. And I'm confused that more people are talking about cookies or McDonald's meals and those kinds of a thing. It's not reflective on the strength of this as well, too. And I just want to thank you for your service.
Thank you, sir.
Mr. Chairman.
Thank you, Senator Fetterman. That's the last questioner, and thanks for your generosity and yielding to colleagues who got here before, whom you got here before, if I said that right. Thank you to Chair Powell for joining us today. And every 6 months and sometimes more often, I look forward to working with you, continuing to work with you to strengthen our economy. Senators who wish to submit questions for the hearing record are due 1 week from today, March 14th. To Chair Powell, please submit responses to those questions for the record no more than 45 days from the day.
Chamber versus the House. How did it balance today between regulation and interest rates?
Yeah, it seemed like yesterday was all about regulation, right? Or maybe that was just, what made the news yesterday. But I think today we heard a bit more from, the Democrats about housing affordability. That was something I think we were expecting to hear. It came up a little bit yesterday, but Democrats basically are framing their concerns about interest rates around this idea that, not only are Americans facing high inflation, but, it's hard for them right now to afford a home given how high rates are. So we heard a little bit about that. I think that on interest rates in particular from the Fed chairman, we heard him say that the Fed might not be far from having confidence confidence that inflation is headed back to 2%, and then therefore they can cut rates. So this not far terminology, that sent, yields down a little bit. There was a little bit of a market reaction on that, so that was interesting. I think that traders have been betting that the Fed would cut rates for the first time in June, so those bets went up a little bit. I think they're around like 69% right now, so it's looking more likely. He's basically saying, look, we know inflation's coming down. He said yesterday and again, we would just want more confidence that it's headed to 2%. So there was a little bit of news there.
All right, interesting. His posture seemed relaxed.
Yeah.
Was it just me? He seems like he feels like we're getting there.
I thought it was funny yesterday. Patrick McHenry, the chairman of the House Financial Services Committee, pointed out that this is Powell's 25th time testifying before Congress since he's been Fed chair. So he knows the drill. He's pretty comfortable. He's pretty used to it. He knows he's going to get a lot of questions that he can't really answer. Or we heard that from him a number of times. Look, this is sort of outside our lane. He's always careful to say, here's our job, and this is not our job. And so we saw that today. But I think also it's just the fact that there's not a whole lot of there's not a whole lot new that he has to share about where rates are are heading right now, because they're just in wait and see mode.
Yeah, absolutely. Sorry for some of the voices we're hearing. We're not just hearing them in our heads, Kate, as we continue our conversation here from Washington on this second day of Fed testimony. From Jay Powell. Jobs report tomorrow.
Right.
It's going to be all about wages for him?
I think that's right. Powell got a question about wages right at the very end. Democrats are eager to, if we're thinking again about the context of the hearing, Democrats are very eager to point out that, yes, inflation, we've had very high inflation, but real wages are rising. So that's something that I think we'll see tomorrow. For the Fed, they are concerned. Some of them have moved beyond this idea that, look, the labor market needs to cool a lot. They haven't been talking about wages a whole lot, but they're going to be keeping close eye on the just number of jobs added. There had been signs that the labor market was sort of gradually slowing last year. So a little bit of nerves about kind of that pop that we saw in January. So they'll be focused on the overall jobs number too.
All right, fantastic. Kate, great to see you. Kate Davidson, Bloomberg's Fed team leader. We went to the source today. It's been far too long since we've had some time to spend with you. Don't be a stranger.
Thanks, Joe.
We're trying to figure this out. This is going to be like, at some point this year, we're going to be looking at this in the rearview mirror, right?
Yes, it seems like a really a long way off, or like a long time we've been waiting, but might just be a few months.
8 months to the election. We'll see if it happens before then. Kate, great to see you. Thank you for being with us, as always, here on Balance of Power. I'm Joe Matthew in Washington. Hour 1 here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Global News as we turn our attention to the State of the Union. We've got a big night ahead here, something that we're going to be talking with Megan Hayes about momentarily here from our Washington Bureau. The president will begin speaking at 9 o'clock, and we've been talking about it for days, of course. The president's State of the Union address, the biggest and most important opportunity that he is going to have until we get to the conventions. If somebody could bring Megan in to talk to us, that would be fantastic, because this is obviously our top story of the day. The questions that you're going to hear people asking on our way toward the speech and our special coverage here on Bloomberg TV and radio is going to be, how long is the speech? How much energy did Joe Biden show? And how many standing ovations were there? Then, of course, we'll also have the conversation about which side of the room was standing and which side of the room was sitting for each of the Talk to me about the closing hours on a State of the Union day like this. Nothing else matters inside the West Wing.
No, you'll see the president rehearsing his speech from a teleprompter in one of the rooms in the residence. He will also be going through and making edits to the speech in real time. He'll have his team of advisors, so there'll be adjustments and changes right up to the very last minute till he gives his speech tonight.
This is something that is months in the making. When does the process begin?
It probably begins, early right before the holiday season starts, they start to think about the messaging and what drives, what he wants to drive. There's also a lot of contextualizing around bringing the people in from the box that the First Lady has and making sure that those stories are people that he's met on the road or different things. When I was there, we had someone from that we had met in Virginia who introduced him, who was a teenager who had his insulin costs lowered. So that process had started, months out, and then they just keep refining it. And, I'm sure they have polling that also dictates some of it now that there's a campaign in place.
Yeah. It's added pressure this time for the president now, of course, running for re-election, but hearing stories and reading analysis every day about his age. It seems like they're raising the bar on this. Jeff Zients, the chief of staff, did a bunch of interviews saying, get ready for an energized Joe Biden. What's the deal with that? Are they making their lives more difficult here?
Yeah, to be honest, I think so. The president has never been someone who gives speeches that are super energetic. That's just not his strength. The president is more of a one-on-one politician, as everyone knows. I do think that this is one speech in a moment in time. Voters in November aren't going to think back, 8 months before and be like, oh, that State of the Union speech, that really changed how I was going to vote. That's not really what's going to happen here. So I do think it is important. You don't want the news cycle to get away from you, and you don't want to make a bunch of gaffes unnecessarily and have a bunch of unnecessary news cycles continuing about your age or your low energy. So it is important for him to hit the mark. I just think we need to lower expectations a little bit and really focus on what the State of the Union address is.
Okay, so let's talk about it, because we're reporting that he's going to make the call for higher taxes on the wealthy. That's a long and consistent refrain for Joe Biden. He's also going to try to talk about accomplishments tonight as well. How much do you need to balance, especially when you're running for re-election, what's been done and what is left to do?
I think that he needs to draw a fair balance. He also needs to draw a contrast to Trump. He needs to show people why it is important to vote for the things that his vision for the future, and show people what he's done for them. I think he needs to make it more granular, though, than just fighting for democracy and raising taxes. He needs to show people how he's changing costs for things, because everyday people who are his voters and his base are thinking how they can't pay for their groceries. So he needs to really show an impact of where he's improved their lives.
We're spending time with Megan Hayes, Democratic strategist, someone who's been there and been in the room helping to prepare the president for a State of the Union like tonight. The spontaneity that the president enjoyed last year is something they're trying to duplicate. That can be a dangerous game. How do you start gaming out potential scenarios and workshopping lines that might work in the heat of the moment?
Well, unfortunately for this president, that's not really a possibility. The president is very sarcastic and witty all on his own. Okay. So he will just live in the moment. To do that? I mean, I'm not sure. The president is...
The team, the so-called team preparing him, will trust him with that.
They will trust him to an extent. I mean, they will say to him, he'll ask, do you think it's a good idea if I respond to X criticism or Y criticism? But at the end of the day, the president is a very witty and sarcastic person.
And it's about the moment.
Yeah, and it's going to...
Did you know that conversion line was coming last year?
I did not.
The Social Security line? So that was something that he just came up with in the moment. That's the perfect thing.
Exactly.
The moment you cannot plan for. Should he be preparing for a hostile crowd?
I mean, I think that there's going to be the normal heckling. I think that
the normal heckling? It wasn't that long ago. That wasn't normal.
That's fair. That's totally fair. Sorry, the heckling that he's been used to.
But this is normal now. This is part of the gig.
Absolutely. What I would wonder is how much heckling is going to be from the Democratic side versus the Republican side. You kind of already know what the Republicans are going to say, but are you going to have members of Congress that are out there, saying something about a ceasefire in Gaza or those sorts of protests from your own team?
Yeah, amazing. The guests were released. I found it interesting, and we might have talked about this the other day on Balance of Power. Those who were not coming made news. The First Lady of Ukraine decided not to take an invitation. The widow of Alexei Navalny did not. Will this be a big part of the show as usual, the guests who are in the First Lady's box?
Yeah, I think the guests play a part, right? They are there to amplify portions of his speech. They bring forth a moment. They go to those folks and they cut away when he is talking about those specific moments in time. Like I mentioned when we had the kid there with insulin.
Yes.
I don't think it's unusual that the people who declined.
Yeah, Sean Fain is going to be there. Interesting, head of the UAW.
Yes.
The Swedish Prime Minister, of course, a new ally and member of the NATO alliance, will be there. Maria Shriver. Latoya Beasley, a woman from Alabama who was awaiting an embryo transfer as part of her in vitro fertilization when her procedure was abruptly canceled by the ruling. This is clearly something the president's going to spend time on.
Absolutely. I mean, I think that reproductive freedom and rights to women having autonomy with their body is a huge issue moving into November. I do think that's one way that he can peel away some votes from Trump and the Nikki Haley folks that were voting for her. That I think that's one way he can get those people. I think it's an extremely important issue. So I think highlighting the IVF ruling in Alabama is huge.
And call for restoring Roe v. Wade and a bigger message.
It all sort of goes together with that.
Yep, absolutely. Does he need to make news on the border tonight? Executive action, an announcement of some sort of action?
I think he needs to say that there's going to be more movement. I think calling for a bipartisan bill is important, but he just did that, and the Republicans didn't play ball with it. So it's just he's in a tough spot with the border. Republicans are always going to think it's his fault when, at the end of the day, they're the ones that ultimately stalled the bill from moving forward. So he's in a little bit of a tough spot. I don't know that he will call for. I don't think he'll do an executive action.
Is this a president who's making tweaks in the motorcade on the way to the Hill, or is this baked?
Oh no, he's making tweaks. This is one of the bones of contentions with your colleagues in the media. They would always want the remarks.
Right.
We're like,
they're not done yet.
We'll give them to you when we have them. So it's always been a bone of contention there.
Thank you for sharing your firsthand experience with us, as always. Megan Hayes, Democratic strategist on this State of the Union Day. Glad you're with us. I'm Joe Matthew in Washington. This is Bloomberg.
1220 on Wall Street. We do check markets all day long here at Bloomberg. State of the Union Thursday. We've got you covered on the state of the markets. Right now, higher across the board, not just higher, but we are looking at records right now. Stocks are hitting records in the run-up to the jobs report tomorrow morning, with investors betting some of the world's major central banks will start slashing interest rates as soon as June. And Fed Chair Jay Powell suggested the central bank is getting close to the confidence it needs to start lowering interest rates. So here's where we stand. S&P 500 index up 49, up now by 1%. Dow Jones Industrial Average up 126 points, up 0.3%, while NASDAQ is up 227, up by 1.4%. 10-year 4.10%, with a 2-year 4.52%. Spot gold up 0.5%, 21.58 the ounce. West Texas Intermediate crude up 0.2%, 79.27 a barrel. Bitcoin up 2% right now at 67,783. On an update for stocks, Victoria's Secret shares are now plunging by 30.3% after the beleaguered lingerie maker's full-year sales guidance fell short of analysts' expectations. Again, the stock now lower by 30.3%. Recapping, S&P advancing, with the S&P up 49 right now, higher by 1%. I'm Charlie Pellet. Balance of Power continues. And once again, here is your host, Joe Matthew.
Okay, Charlie Pellet, thank you. Welcome to the Thursday edition of Balance of Power. I'm Joe Matthew in Washington, D.C. Little Friday, and it's a big one around here. It's the State of the Union address tonight, and I know we're all jaded and sick of the division and the conversation that frequently comes with policy and politics here in Washington, but this is still a big deal. And in an election year, a presidential election year, it's an even bigger deal for an incumbent who is running to get the job again. Joe Biden will speak starting 9 o'clock tonight. We'll have special coverage here on Bloomberg Radio starting at 8:30 p.m. Washington time. Kaylee Lyons will be here in our Bloomberg Bureau. I'm going to bring you, speaking of behind the scenes, into Statuary Hall, right outside the door of the chamber, where the leadership, where the members, everyone walks in. They do this Oscar style on the red carpet. You can hear all the jeering and all the rest, the applause. And then when they emerge, getting the viewpoints of the lawmakers is one of the experiences that we're going to have together tonight. And that's where we start our conversation with Mike Dorning, the best of Bloomberg politics, who's covered a couple of states of the union, with us at the table now. Happy State of the Union Day. You appreciate the significance of this, not only for the administration, to point the way forward for the next year, to talk about the next year's budget, to identify the points of controversy, maybe sometimes without realizing it. The cabinet's there. The Supreme Court is there. This is big stuff, a joint session. It's an even bigger deal when the boss is running for re-election.
Absolutely. This may be the largest television audience Joe Biden will have before he's up for election in November, if there aren't presidential debates. Probably presidential debates would get a higher audience, but this may well have a larger audience than even his acceptance speech at the nomination. So it's a real kind of tent pole of your presidential campaign, and it's coming just after Super Tuesday, just as we're pivoting into the general election. So it's really the premiere, the debut of this phase of the election campaign. This may not be as large a television audience as back when Ronald Reagan and Bill Clinton used to give these, but it's still a big one, and it's a big opportunity to set the themes of your campaign.
So how much of this, when you're crafting this speech in the West Wing, is campaign versus administration policy? Or is there no difference in the end?
There is a difference. The problem is, like, those people who want like a mention of this and that are still scrapping to stick it in the speech instead of keeping it streamlined. And that's always a fight between the president's political advisors and speech writers versus all the like bureaucrats who are trying to get something in the speech. It's best used as a way of setting the themes of your campaign, of a vision that puts together what you've accomplished and the way forward in themes that people can understand, but with enough specifics to reinforce them, so that in that way it looks like a governing speech in part because it has specifics reinforcing your themes. But the best State of the Unions in this phase of an administration focus on setting themes for how you will go forward and how that naturally flows from what you've done.
This has turned into a bit of a contact sport. Joe Biden's going into the Coliseum tonight, and I wonder if he prefers it that way. We were talking a short time ago with Megan Hayes about the now normal lack of decorum at the State of the Union, the heckling that's followed certainly Joe Biden. Remember the outrage when Joe Wilson screamed, "You lied"? Good Lord, he was censured for that, wasn't he? In this case, it's par for the course, and the president sees it as a volatility that he can leverage.
Absolutely.
Right?
I mean, it worked very well for him last year, and there's the potential for that to work well for him now. A lot of the stateliness, the grandeur of the occasion has been chipped away at by our kind of politics that's like a food fight. But the knock against Biden is that he's not as, alpha testosterone aggressive as Donald Trump, and that's like a contrast against him. And last year when he was able to push back at people as they were yelling out at him, that made him look more lively, more aggressive, more commanding than he otherwise might.
That's a big part of the job tonight. Some have suggested that him appearing energetic is more important than any policy he's going to touch.
Yeah, for him, it will help for him to look energetic. But ultimately, what the president has to do is appear commanding. And sometimes that can be energetic, sometimes it can be restrained. But we want a president who looks like he's in charge. And the way President Trump has done that is through aggression and being very outspoken. So Biden has to come up with a commanding presence that fits his personality, fits his office, but also pushes back against this idea that he's old and Trump would say tired.
He will not apparently mention Trump tonight. Is that smart?
By
name, at least.
That's in keeping with the way incumbent presidents have often approached these occasions. Even if he's not mentioning him by name, he'll be setting up a contrast with President Trump if he's at all effective. And it seems like is very much what they're thinking about, setting up a contrast with Trump. I don't remember whether Obama actually mentioned Romney's name or not. My recollection, I don't remember him announcing it, but I didn't check before I went on air. But in his State of the Union, he very much set it up to be a contrast with Romney, even though Romney was a long ways from being nominated at that point. And presidents running for re-election always are trying to set a contrast.
So much of this is optics, I think we're proving. Over one shoulder will be Mike Johnson, kind of something we're not used to seeing with Joe Biden in the speaker's rostrum. Of course, Kamala Harris will be there. That's a weird job, too. You're on camera before tens of millions all night without a chance to say a word. You have to kind of stay measured, be careful with the expressions. He's not going to be ripping up any scripts like Nancy Pelosi, right?
I think Nancy Pelosi is the only Speaker of the House I've ever remembered being able to be a presence in that. I mean, basically...
the eye rolling and the expressions.
Yeah, I mean, every other Speaker of the House, most people don't even know who they are, even for speakers who've been in much longer than Nancy Pelosi, I mean, much longer than Mike Johnson. Basically, the only speakers in history anyone ever knew were Newt Gingrich and Nancy Pelosi.
Maybe Tip O'Neill.
Maybe Tip O'Neill, but they're just generally people that Americans don't see a lot on TV, don't know that well, and they usually just sort of fade into the background. And my guess would be Johnson's not a big risk taker, clearly. He's not going to take risks like tearing up a speech or something like that.
He's going to have the Supreme Court sitting there in front of him. They're usually in the front row, right?
Usually some of them come, not all of them.
Sure. Does he have a message for the justices after what's going on in the campaign here?
I mean, his message for the justices will be just hold firm.
Do you go there, though? Say, I see we have several Supreme Court justices with us as you consider presidential immunity. Consider this.
I think it's unlikely that he will very specifically address them in the same way that a former president addressed them after the court ruling opening up, millionaires' money into politics. It's rare that presidents specifically take on the Supreme Court during the State of the Union message.
That would be news.
But sometimes they will implicitly do so.
Brush up against that. We're going to hear from Senator Katie Britt afterward. Mike Dorning, the youngest Republican woman ever elected to the Senate. It's an interesting choice. People are already talking about veep stakes around her. 42-year-old's going to stand up, and that's quite a contrast.
Well, I think it is a deliberate contrast with Biden and getting across the idea that the Republican Party is a younger, dynamic party. It's probably unfortunate for them that she happens to be representing Alabama, and the's the whole IVF abortion connection going on now.
Will she address that, you think?
I would doubt she would, unless it was to just say that we will protect IVF in some open-ended way.
That says a lot, though, if we need to acknowledge that as a Republican Party, right?
I think that is a big problem for the Republican Party, because most Americans do support IVF, and they have been unwilling to do any federal support for it, and they've let this these kind of very nebulous state laws get in the way of IVF.
You better believe that we're going to make that an issue as Democrats tonight.
Oh, I'm sure the Democrats will. But
I'm using collective we across the board here.
But at the same time, they probably weighed the pluses and minuses, and they probably knew that was a minus. But they were going down this path anyway, and that contrast of a young leader and a female leader, there aren't as many on the Republican Party as in the Democratic Party, is a good image to put up, and most people don't know her.
And a reminder that Alabama has a senator not named Tuberville while we're at it.
Who's a woman.
Yes.
Who's a young woman, not an old man.
Right.
I think that's the big reminder, that there are young women who are leaders in the Republican Party, and it's not all old men.
With what to watch tonight, Mike Dorning, great to see you on State of the Union Day. Enjoy the big show. A Bloomberg politics reporter. I'm Joe Matthew in Washington. I want to bring you up to date on the news before we assemble our panel. Amy Morris has that in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Sweden has formally joined NATO as the 32nd member of the alliance. The move ends decades of post-World War II neutrality as concerns about Russian aggression in Europe have spiked after Russia's invasion of Ukraine. Sweden's prime minister will be a guest of honor at tonight's State of the Union address, and that's where President Biden will propose increasing minimum tax rates paid by major U.S. and multinational corporations to 21%, eliminating breaks for companies with high-paid executives. It would affect corporations valued at $1 billion or more, raising their minimum tax rate from the 15% level implemented earlier in his term. As we wait to hear the president lay out his vision in his election year address, Tobin Marcus, the head of policy and politics at Wolf Research, tells us he expects an energetic performance. You mentioned that earlier in your program, Joe, and that he says as long as he can avoid any notable flubs, it should be a success. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index all advancing solidly in the green. Russell 2000 as well. And right now we've got the S&P holding very close to session highs. S&P with a gain right now of 47 points, up by about 0.9%. Dow Industrials up 101, up by 0.3%. The NASDAQ Composite Index surging 222 points, up by 1.4%. S&P, by the way, is trading at a record. So we got stocks advancing in the run-up to tomorrow morning's jobs report. Jobless claims, meanwhile, are holding at historic lows. And with that story, here's Bloomberg's Vinny Del Giudice.
The government says jobless claims ran at 217,000 for a second week. In the decade before the pandemic, weekly claims averaged more than 300,000. Payroll cuts are on the rise, though. Roughly 85,000 cuts last month, according to executive coaching firm Challenger, Gray & Christmas. Looking ahead, we'll get official payroll data for February on Friday. Vinny Del Giudice, Bloomberg Radio.
Of course, we will have complete coverage as that number drops 8:30 a.m. Wall Street time, and instant reaction and analysis to the jobs report. 10-year 4.11%. We've got the 2-year yielding 4.52%. Spot gold up 0.4%, 21.56 the ounce. West Texas Intermediate crude oil up 0.1%, 79.25 a barrel, and Bitcoin surging 2.1% to 67,878. New York Community Bancorp's new leader wants the beleaguered commercial real estate lender to look more like other regional banks. NYCB up another 7.2% today. And we're keeping an eye on Medtronic shares. The medical products maker is recalling over 45,000 catheter tubing devices. Medtronic down 0.1%. Recapping stocks push higher. S&P up 44, up 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. Back we go to Washington. And once again, here's your host, Joe Matthew.
All right, Charlie Pellet, we thank you as always. Thanks for being with us on this State of the Union Day, the Thursday edition of Balance of Power. I'm Joe Matthew in Washington. It's good to see you. Thanks for being with us on YouTube, on Bloomberg Radio, on the satellite as well. If you haven't found us on YouTube yet, it's simple. Search Bloomberg Global News. Easy as that. You'll find our live stream there. You'll actually know what Rick and Jeannie look like. Although you see them on TV. They're TV stars all the time. We do have our signature panel with us in Washington today. Rick Davis, Bloomberg Politics contributor, Republican strategist, and Jeannie Shanzano, Democratic analyst, and of course, Bloomberg Politics contributor. Welcome, both of you. The State of the Union tonight is going to be happening, of course, against the backdrop of a presidential campaign. And we hear today that No Labels is actually going to go for it. There may be no name for the ballot, but the group is expected to move forward with a campaign for 2024, as they promised, if it ended up being Joe Biden and Donald Trump. And here we are. It looks like we might get an announcement on Friday. No Labels delegates voting Friday. As I read in the Associated Press, in favor of launching a campaign for this fall's election. Jeannie, Democrats' worst nightmare, right? Or is it? They don't have a candidate.
Yeah, I mean, I have a lot of questions about this. And by the way, happy State of the Union Day, Joe Matthew. I have a lot of questions about this. You know, you're just talking about these 800 delegates. We don't really know who they are. So much of what they have been doing at No Labels has been shrouded in this secrecy. You know, who is funding this, for instance? Who, if they decide to go forward in this top secret, not so secret meeting on Friday, who is going to be on the top of the ticket? It won't be Larry Hogan, it won't be Nikki Haley, you know, it won't be Joe Manchin, apparently. Who would it be? So I think there's so many questions to be asked and answered about this. They describe themselves not as a party, but they're certainly acting like a party from the old days. So yeah, I'm not a big fan of this effort yet until I hear what this process is and bring out who is funding this. Where is the money in particular?
As I read the wire of record here, Rick, No Labels will not name its presidential or vice presidential picks on Friday. They are instead expected to debut a formal selection process next week for potential candidates who might be named in the coming weeks. You've actually run presidential campaigns. This is not real, is it?
Well, it's depends on what you mean by real. Some of the presidential campaigns I've been on didn't seem real at the time either. But that being said, if you mean, do they make an impact on the selection of a president this year? Yes, they will. Do they have a chance of actually electing their candidate? No, they don't.
Yeah.
You know, it's just simple math. And so I think that what they are considered is a spoiler. And I think there are very few political professionals I know, save those who are already aligned with No Labels, who don't think that they will be a spoiler. And the only thing they have to decide with the selection of a candidate is who are they going to spoil? Are they going to find a conservative MAGA Republican and spoil it for Trump? Unlikely. Or are they going to find a moderate Republican, Democrat, independent who would likely spoil it for Biden? Highly likely. So I think it's still a mystery as to who's going to say yes to door number 3. But at the end of the day, I think their impact is going to be on the 2 major parties and not for themselves.
Every name we've heard of significance, at least, Jeannie, has said no. Beginning with Joe Manchin. Nikki Haley's ruled it out. Mitt Romney's not going to do it. Is John Kasich or somebody going to show up here? I mean, you would need a name to make this work, wouldn't you?
You absolutely would. I mean, if they come up with somebody most of the country has never heard of or is not familiar with, I don't know how you make that into a viable campaign. But the reality is just what Rick said. This is not really about them winning because they really don't have a shot given how our rules work. This is about them impacting the other 2 parties. And the way that this impact could turn out is something that I don't think any of us want to live through, which is that neither Joe Biden nor Donald Trump get the 270, and this election is thrown into the House. We've spent the last year or so, all 3 of us, talking about the House of Representatives. Imagine now if in November, the election decision lands in their lap. Wow, what is that going to be like? Yeah. So if this is what No Labels is setting out to do, you know, it's just something I don't think anybody needs or wants. And this is really what looks like is going to happen if you just take a step back and look at the math of this thing.
Reinforcing Rick's point, the group Third Way, and sometimes we've spoken with their members as Democratic analysts here on the program. Third Way has been working overtime on this No Labels issue, and they've got new polling out, Rick, that finds even a theoretical Nikki Haley Dean Phillips ticket, okay? They both just dropped out, DNR unity ticket, wouldn't come close to making their way to victory. It finds Haley Phillips would get 9% for a 4th place and would hurt Joe Biden more than Trump. At some point, we're going to get a name here, I presume, Rick, and then the effort's going to get underway to get them on the ballot. Is that possible to do nationwide?
Yeah, it's going to be very, very difficult. No Labels says that they are on 16 ballots right now. The maximum they can probably get without actually having a candidate to name, because many states actually require the candidate themselves to register to be a candidate. And so until they have a candidate, they can't register. And then, of course, there's still states that they're going to require to get on the ballot by getting lots of signatures. Arizona, great example, 40,000 signatures. You know, that's a not insignificant task, and the deadline's 2 months away. So, you know, they to say they have their back up against the wall, they're making a decision now because they have to, not probably because they want to. And I would think that they're not going to go the route of traditional politics. I would, you know, one of the ideas that was presented to me, I thought was interesting. Is like, you know, a former admiral, chairman of Joint Chiefs of Staff, you know, would be seen as a conservative person because of the lifelong commitment to the military, strong national defense, foreign policy. You know, that's a kind of out of the box idea. Having worked with a lot of people in the military, I'm not sure you want them to run for president, but, you know, that was one of the ideas that I thought was interesting.
Fascinating. Boy, I guess we have a lot more to learn here, including how they get all of this together in time for an election with Joe Biden and Donald Trump way down that road already. Rick Davis and Jeannie Shanzano are with us on State of the Union Day, and coming up, we're going to look at the Achilles heel for Joe Biden as he tries to walk into this speech. It came out on Super Tuesday, the uncommitted movement in the Democratic Party. We'll get there next. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of supermarket chain Kroger are higher after the grocer's full-year adjusted profit outlook beat analyst expectations, making it the latest retailer to offer an upbeat outlook as customers show resilience. Kroger shares, they're rallying now by 8.9%. The company posted fourth quarter sales that beat expectations as consumers prioritize spending on groceries and essentials. Xcel Energy is acknowledging that its equipment was likely involved in igniting the worst wildfire in Texas history. And with more on the story, here's Bloomberg's Kimberly Adams.
Charlie, in a statement, Xcel said, based on currently available information, Xcel Energy acknowledges that its facilities appear to have been involved in an ignition of the Smokehouse Creek fire. Xcel said last week that it had been asked by a law firm to preserve a fallen wooden pole located near the potential origin of the Smokehouse Creek fire, which was charred more than 1 million acres and resulted in at least 2 deaths. While recognizing that its equipment may have been involved in starting the fire, the company said, quote, it disputes claims that it acted negligently in maintaining and operating its infrastructure. Charlie.
And that's Kimberly Adams reporting. Xcel shares, they're up now by about 1.5%. GE's aerospace division set plans to return more of its profits to shareholders, including restoration of a significant dividend as it accelerates earnings as an independent company. GE said operating earnings at GE Aerospace are forecast to reach $10 billion by 2028. Coming up after the close of trading today, we will be hearing from chipmaker Broadcom. And those are our top company stories at this hour. And this is Bloomberg.
You're listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
The uncommitted vote on Super Tuesday, not unlike what we saw in Michigan in the Michigan primary just a week earlier. I'm Joe Matthew in Washington, looking ahead to the State of the Union address with our signature panel. Jeannie Shanzano is with us alongside Rick Davis, Bloomberg Politics contributors. As we turn to the numbers here from the Super Tuesday contests, Minnesota specifically, Jeannie, 19% uncommitted, 13% no preference in North Carolina. These are some of the voters Joe Biden gets to speak to directly tonight. What will be his message when it comes to Israel and Gaza?
For the Palestinians and the suffering that is going on. But we're also going to hear what we are just hearing now, which that the United States is going to actually take action to build a port so that they can aid in food shipments to the Gaza Strip. So we're going to hear, rhetorically empathy, and also we're going to hear about some actions. But the reality is this is a big challenge for Joe Biden. He is in an enormously difficult position because he does have the left flank, which includes not just members of the American Muslim community, but young people. In some of those Minnesota areas you're talking about, if there was a large percentage of young people in the precinct, they went 2 to 1 in this direction. So these are big numbers. It's a concern for him in these states and across the country, and it's going to play big in the November election. So he's going to try to sort of give us an inkling tonight as to how he's going to show voters on the Democratic side that he is listening and also taking action.
How would you handle this tonight, Rick? Do you acknowledge it? Do you send a message to those uncommitted delegates who will meet at the convention in Chicago?
I mean, obviously the president is going to address the conflict in Gaza. And I think that whatever he says will probably likely send a message to the protesters who have wanted him to be more aggressive about a ceasefire. And so I don't think there's anything particularly special that he needs to do. Obviously, the only reason we're talking about this is because we have an incredibly divided electorate, and a few 100,000 votes anywhere could be meaningful. I would remind everybody that Joe Biden beat Donald Trump by only 300,000 votes in Minnesota in 2020, and so 100,000 protesters, or even some subset of that, is a meaningful defection from the Democratic Party. Whether or not that's still the case 7 months from now, I would doubt it. I would think that the Biden administration, the president, and frankly, the other League of Democratic Nations would have some influence on the situation in Gaza that would maybe change the current dynamic by Election Day in November.
Jeannie, we talked about decorum on the Republican side of the aisle. Does Joe Biden have to worry about some progressive members of the Democratic conference sitting on their hands when he gets to issues like this?
You know, I think that is bound to happen. And I think the question is not only do some sit on their hands, like Ilhan Omar and some of the others who have been outspoken on this issue, but does anybody say anything, you know, out loud, make facial expressions? Do we see any form of protest? Even Adam Schiff has been getting protested since he won. And, you know, there is a school of thought. One reason the president didn't go out on Tuesday night and celebrate his victory was because of this fear of protests. And this is the problem that I'm talking about. He's being squeezed on the left, but also on the right. We were just talking about no labels. One of the things that we heard reported what that they were talking about in running against Joe Biden, making the case that he has been bought by the far left, that he is sympathetic to Hamas and anti-Israel. So that's a problem for Joe Biden.
We're going to get into this a lot more in our next hour. Rick and Jeannie will be with us. Of course, Kayleigh Lyons will join the conversation ahead of tonight's State of the Union address. Amos Hochstein will join from the White House to get the administration's view on energy and other issues in the speech tonight. And we'll have much more for you straight ahead on the fastest show in politics. Hour 2 starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Joe Biden goes prime time. Welcome to the fastest show in politics on this State of the Union Day in Washington, hours away from his address to a joint session of Congress at a time of division here in the Capitol and uncertainty on the campaign trail. I'm Joe Matthew in Washington alongside Kayleigh Lyons. And this is going to be, Kayleigh, Joe Biden's biggest opportunity to speak to the biggest audience he's going to get until the convention.
Absolutely. This is his chance to make the case to voters why they should pick him, elect him to a second term. And there's a number of issues he is going to have to grapple with in this speech tonight, not just domestic issues here at home, economy, the border, but foreign policy as well. And within just the last hour, we've gotten news that in part he will be addressing the hot topic of Israel and the ongoing war against Hamas by directing the military to establish a port on the Gaza coast to ramp up the delivery of aid. And of course, we're going to have more on Middle East and energy policy this hour with Amos Hochstein from the White House.
Yeah, a special conversation to get the view of the administration going into the speech this evening. Kayleigh, it starts at 9 p.m. Eastern time. Our special coverage starts at 8:30.
Absolutely. It's going to be another long night here in Washington. So buckle up, guys. We'll be with you through it, through the long haul. And of course, as always, Charlie Pellet's with us through the long haul of the trading day. Charlie, where are we at?
All right,
at about
now,
1 p.m. Eastern.
We're at records, Kayleigh, and I got you covered on the state of the markets with the Dow, the S&P, NASDAQ, all pushing higher. S&P right now, 5132. The number to beat for a record today is 5137. S&P right now up by about 0.9%. Dow Industrials up 118, higher by 0.3%. The NASDAQ Composite Index up by 1.4%, and the Russell 2000 Index of small cap shares up now by 0.9%. 10-year yield 4.11%. We've got the 2-year yielding 4.52%. Spot gold up 0.5%, 21.58 the ounce. Crude oil, West Texas Intermediate 79.28 a barrel, up by 0.2%, and Bitcoin up 1.6%, 67,561 right now on Bitcoin. Stocks are hitting records in the run-up to the jobs report tomorrow morning, with investors betting that some of the world's major central banks will start slashing rates as soon as June. Novo Nordisk shares pushing higher now by more than 9%. It is touting the potential of its next-generation obesity treatments, releasing promising data on an experimental daily pill and sending the shares soaring to a record. Again, we've got Novo Nordisk. The ADR is up now by more than 9%. Recapping, S&P right now trading at a record, up by 1%. Balance of Power continues. Back we go to Washington, and once again, here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Meanwhile, here in Washington, it is State of the Union Day, and we are all gearing up to watch with anticipation the president's address to a joint session of Congress tonight. We're playing the game of how long this speech will go, maybe an hour, maybe up to an hour and a half. But frankly, there's a lot of content that could be packed in.
That's true.
And foreign policy is probably going to feature pretty heavily in the speech. We're already getting some clues, Joe, as to what exactly in that regard the president could announce tonight.
That's a great point. Look, they're going to cover a lot of ground here. This is, the proverbial laundry list of priorities. But yes, the situation in the Middle East, coming off our conversation earlier today with Rick and Jeannie, the uncommitted vote that we saw on Super Tuesday and in Michigan, and a president who's suggested that Israel's response has been over the top. We have breaking news on the terminal here that the president will direct the U.S. military to establish a temporary port, build a Gaza port on the Gaza coast to ramp up the delivery of aid. This would be a significant development, Kaylee. We were talking about airdrops just a week ago.
Absolutely, and it raises the question of whether this is the administration having to find ways to go around Israel, or exactly how that relationship is working as the U.S. makes moves like this.
100%. We begin our conversation with that backdrop with Amos Hochstein is with a senior advisor to President Biden for energy and investment, and with us now from the White House. Amos, it's great to see you. There are a lot of things we'd love to ask you about when it comes to energy policy. I wonder if this is in your portfolio, what the president will announce tonight when it comes to Gaza.
Well, great to be with you as well. And this is an exciting day where the president can really talk to the American people about both the achievements of the last 3 years and where the world is today, and the vision for the future. So clearly, he has spent an enormous amount of time working on the Middle East over the last several months since the attacks of Hamas on October 7th, and trying to bring the hostages, the Israeli hostage and American hostages home, and achieving a ceasefire through that process, while also making sure that enough humanitarian assistance enters Gaza during this time of conflict.
Well, and as Joe mentioned, that may now include trying to get aid through Gaza, through the waterways, by establishing a port. But of course, one of the ongoing conversations around the conflict in the Middle East, not just when it comes to the direct conflict between Israel and Hamas, but also what we're seeing in the Red Sea with the Houthis, some of the other activity has been going on, is whether or not it was going to be disruptive to energy flows, which of course is in your purview, Amos. Should we expect to hear from the president about that tonight to potentially ease concerns that what is happening abroad will affect prices at the pump at home?
Well, I think, as you know, we've talked about this before, the president has been laser focused on the American economy and bringing costs down. And over the last 3 years, he has really directed the economy and presiding today over the strongest economy on the planet, that has a lower inflation, lower cost to the American families, and that includes energy prices, while at the same time we have manufacturing and with low unemployment. And that is really, he did this by focusing on bringing costs down to the middle class, to the American public, and focusing on the strength of that middle class. So when it comes to how do you get to that, to achieve this kind of an economy, not only today, as we sit here, but also focusing on the future, you have to look at what's happening domestically and internationally. And despite the fact that the Houthis have been attacking ships in the Red Sea, costs have been the cost impact has been muted. We have worked with the private sector, with the shipping companies and everyone else to make sure that alternatives are there and that the costs don't affect consumers, especially here at home. And I think that's been largely achieved. And the president will continue to focus, as he'll outline today, on the policies of expanding and accelerating the energy transition while ensuring that the current energy mix that we have today is maintained, is strong, and is affordable.
You were just in Lebanon, Amos Hochstein, meeting with leaders there. Are you confident, following your talks and your time spent there with leaders, that Israel will not open a wider war, a new front to the north?
Well, as you said, I was in Lebanon on Monday and in Israel on Tuesday, and to make sure that we convey to all sides that a diplomatic option here is the right way to go, to enable Israelis to go back to their homes in the northern Israel safely and securely without worrying about further attacks. And the same is true for Lebanese communities returning to their homes. We've had a sort of a low level or a lower level of conflict going on for 5 months. And the president has been clear that he believes that we should exhaust all diplomatic efforts to get there. And I believe that it is possible. Clearly, all the dots in the Middle East conflict are connected, whether we like that or not. And so we have to work on this in unison with some of the other efforts that we're doing. But we are clearly pushing for a peaceful and secure diplomatic option.
Well, Amos, part of what the president will be doing tonight is making the case for another 4 years, because if he is not elected to a second term, his work ends next January. And I just wonder, when we're thinking about what's happening in the Middle East, how much you think conflict there will be resolved, how much progress realistically can be made by November or at the latest January, or will this take another 4 years to sort out?
Look, I think the president's been working tirelessly and personally to bring an end to this conflict as soon as possible, to bring back the hostages home, and to do that while maintaining a ceasefire, and to bring an end to this conflict as soon as possible, much sooner than the timelines that you're referring to. He is very focused on this. So I think we're going to talk about, I think you're right, the speech tonight is about what we've done and what he has been able to do over the last 3 years, and where we're going to be going the next 4. And I think that the American leadership around the world is without question enhanced and strengthened. Keeping the world together has been critically important. Maintaining the strongest economy in the world gives us additional leverage and ability to lead. And look, there's no doubt that there's connectivity between what we do at home and what we do around the world. Strengthening democracy, strengthening our institutions, and making sure that we have a healthy economy that is not just based on an old-time scenario or vision of enriching 1 or 2% of the economy, and that will promote the rest, but rather building out that middle class, creating a stronger economy that is focused on the future. That future that you're talking about is what gives us the strength. The Inflation Reduction Act, I can tell you, where we go in the world, even in Lebanon, in the middle of a conflict, they talk about the Inflation Reduction Act and what the president is doing to strengthen the American economy.
Lastly, Amos, you've been very generous with your time. I want to ask you about the president's pause on LNG export approvals. I don't know if this is an issue he plans to address tonight. I suspect this might come up, but I wonder if it's possible this turns into a permanent moratorium.
I think what the president announced, or actually the Department of Energy announced, is a pause so that we can look at the factors. But we have to level set, because there's been a lot of talk about this. The reality today is that we are the largest exporter of LNG in the world. And from that base in the market of being the largest, we will double our exports capacity between now and 2028. So what we're saying is that is not in question, and that is not on pause. What is on pause is to say beyond that, beyond 2020, beyond 2030, do we need to look for a minute and say, with such exponential growth that we've seen, do we need to look at the economic impacts, on the market impact? And do we have to look at what the environmental and climate impacts are on the communities that live along our Gulf Coast before we say we're going to give more permits? So do we even need more facilities is a good question to ask. I don't know the answer to that. There have been different projections of where demand is going to be. So I think his focus is going to continue to be tonight, tomorrow, for the next 5 years on accelerating the energy transition, but we have the energy mix and the energy security for us and for our allies.
All right, Amos, thank you so much for joining us on this State of the Union Day. Amos Hochstein, Senior Advisor to the President for Energy and Investment. We appreciate you joining us on Bloomberg Television and Radio live from the White House. Now we want to get another voice into this conversation, and we're joined now by Jane Hall, American University Associate Professor of Journalism and Media Studies, also author of Politics in the Media, Intersections and New Directions. Jane, great to have you. There's been a lot of talk about how the president's speech tonight, while it will be about policy, it perhaps even more so will be about presentation, because this also is about the perception that at 81 years old, Joe Biden is too old for the job and shouldn't be elected to a second term for that reason. What really matters this evening?
You know, I think it all matters. I think the subtext is he up to the job? And if he, God forbid, trips, or seems to be moving slowly, that will be something that will be played by the Republicans and, frankly, conservative networks as well. So a moment for him is to simply be vigorous and deliver the speech well, maybe even mix it up a little bit, you know, with some of the GOP. Yeah. If they shout at him, perhaps to remain statesmanlike, but also show that he can mix it up. You know, they're talking about letting Biden be Biden. And I think one of the very interesting things in your speaker just now is that they are going to try, it would seem to me, to paint a picture that this is a person who has a vision for a second term, that you don't want Donald Trump for a second term, and the memory of a lot of people has faded. And so the international piece is very important. Obviously, I teach young people, I teach college students, they're very concerned about the deaths in Gaza. That is a place where he is losing a lot of voters. He is associated in a lot of young people's minds with one side of this conflict. Also, I think he also has to deal with the fact that he wants to say to people, we have this tremendously strong economy, when in fact people have not been feeling that. You know, people see it in inflation, and he's being stuck with that. And so I think he probably needs to do what Bill Clinton was famous for, which is, I feel your pain, we're working on this. Yeah. But I also think he's got to show that he's on the side of working people, which has been something he's said many, many times. And somehow that message has gotten somewhat faded in the American mind. You know, we could debate why that is, but to say this is what we did with the Inflation Reduction Act, you know, probably many people don't know what they did.
Yeah, much of this is going to be reminding folks of what's been done, which brings us to the audience. Jane, you're a media expert. Is he talking to the people in the room at all tonight, or is this really about people in their living rooms? He's going to be looking all the way across all of those heads in the chamber to the cameras all the way in the back of the room to make eye contact with me sitting on my couch, right?
Absolutely. And, you know, people, this is one of those collective events. People will be tuning in. You know, this is an important event, especially that we now know that it's going to be a rematch. Unless something drastic changes, that it's going to be Biden versus Trump. He is going to be playing to the audience at home, and he's also got to at least address the audience in the room. And I'll be interested to see how much does he go after the GOP? How much does he talk about how Trump, in many people's views, killed a bipartisan immigration bill? I don't think he's going to go too near immigration. I think he's probably going to be playing to an audience at home and saying, I feel your pain, I'm on your side, remember me as the guy that was that and is that. That's where I think he's going to be trying to speak. But again, if there's a moment where he seems to falter, that is going to be a viral video. And so he's got to not have that happen. Regrettably, that would be picked up all over the place.
And Jane, we have less than a minute yet left with that, which actually ties into this question. Isn't this also in part about sound bites that are going to be replayed on TikTok and on social media perpetually? This isn't about the speech in its entirety, right?
Oh, absolutely. It's what the pundits, it's what you and we and everybody else on networks that have different opinions, cable news being huge about this. You know, if he makes a mistake, that'll be picked up by people who don't like him and don't want him to win. TikTok is very important. Again, I know that from my students, and they're getting out there with those bites that work to different audiences is partially going to be in the hands of this very fractured media environment we're in right now.
That's very true. All right, Jane Hall of American University, thank you so much for joining us. The young voters and the TikTok generation, perhaps they're one and the same. We'll have more coming up on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records for the U.S. stock market right now. The S&P number to beat is 5137 right now. We've got the S&P 500 index trading at 5154, up just about 50 points, higher by about 1% right now. The Dow Jones Industrial Average up 155 points, up 0.4%. The NASDAQ Composite Index up almost 1.5%, higher now by 232 points. And the Russell 2000 index of small cap shares up 0.9%. But to be sure, we do have the S&P right now holding at a record. We've got the 10-year at 4.11%, the 2-year 4.52%. Spot gold up 0.5%, 21.57 the ounce. West Texas Intermediate crude oil higher, little changed, up just under 0.1%. WTI 79.19 a barrel, and Bitcoin up 1.8%, 67,676 right now on Bitcoin. Victoria's Secret shares are plunging, down now by 30.1% after the beleaguered lingerie maker's full-year sales guidance fell short of analyst expectations. Right now, Victoria's Secret down by 30%. So again, recapping here, the key takeaway at this hour: S&P holding at a record, up now by 49 points, up by 1%. Balance of power continues. Back we go to Washington, and once again, Joe Matthew and Kayla Lyons.
All right, Charlie, we thank you. I appreciate your being with us on the fastest show in politics here on Bloomberg Radio and TV. It's State of the Union Day, and Kaylee, I've been making the point all day. When we get bogged down in the division and the horribleness of politics in America right now, we can sometimes forget some of the wonderful things that take place in politics and in Washington. This would be one of them. It's like Oscar night in town. And I know people will probably be yelling and screaming by the time it's over.
Surely.
But the pomp and the history that surrounds this event is one of the wonderful things that we get to do every year.
Absolutely. I mean, think of all of the iconic images of State of the Union's past when you have the Speaker of the House behind one shoulder, the vice president behind the other shoulder of the president. I think we all remember pretty well during the Trump years, some of the things Speaker Nancy Pelosi did during and after the State of the Union.
I don't think we're ripping up any scripts.
I don't know if we'll rip up any scripts tonight. Of course, this will be the first time that House Speaker Mike Johnson has a chance to appear in this capacity.
That's true. He'll be over one shoulder and Kamala Harris the other. And with us for the duration, Kaylee's going to be here at the desk in our bureau, along with Rick Davis and Jeannie Shanzano. I'll be joining from Capitol Hill, and our signature panel is with us right now. Jeannie, this is a big night. Mr. Speaker, Joe Biden will come down the aisle, hugs and handshakes. At some point, the applause will die down, and then the real stuff begins. How much of a coliseum is he stepping into tonight?
It is a huge night. And, you know, I was just looking back. Who in the modern American, political landscape has sat through more states of the union than Joe Biden? And, he gets to Congress in 1973. He leaves the White House in 2017. By my calculation, he's just at about 50 years. So nobody should be better prepared to do their final State of the Union for the first term than Joe Biden, having sat through so many. So, he defied expectations last year. The big question is, does he do that again tonight? I think he does have things to talk about. Number one in my mind is the economy. If I was him, I would take a lesson from Donald Trump, and I would talk about those good numbers that the Wall Street Journal poll told about the economy. And I would not use the term inflation. I would talk about cost of living, and I would blame corporations for driving up these costs. And I would talk about what you're going to do to combat that. In other words, Joe Biden on the side of the middle and working class.
Well, to Jeannie's point, Rick, this may be one of 50 some odd State of the Unions that President Biden will have been a part of. But this one is also different because this is also a speech that he is giving after the general election has effectively begun. Is this about the State of the Union or the state of the re-election campaign?
Yeah, you're right. This is the first one of these kinds of speeches that he has had to give. And the reality is this is a campaign speech, regardless of what the formal requirement or opportunity it is for the president to declare the state of the nation in front of Congress and the Supreme Court. Well, that's nice. That's, as Joe said, a great tradition that we love here in Washington, D.C. But he will have the largest number of people listening to him since his presidency started. This is going to be an incredibly important State of the Union compared to the previous three. And what he's going to have to do is convince people that, he believes in Americans' greatness. He believes that we've pulled ourselves together after COVID and created an engine of economic reform, that we have more influence in the world than we've ever had, that the future is bright. Because when I look at all the numbers that tend to, give Biden and his campaign problems. It's the direction of the country. People believe what Donald Trump is selling, which is our country is in decline and our presence in the world is less influential than it used to be. And we just need to hunker down and pay attention to our own people and let the rest of the world take care of itself. And that is a stark contrast to what Joe Biden needs to sell tonight. But he has to explain why those things are important. Why is it important to be the leader of the world? Why is it important that we have a strong economy at home to project power abroad? Why is it important that we stand up to our enemies and adversaries around the world? I think this needs to be more of a storytelling session than an iteration of his accomplishments in office and how many lobbyists got what into the speech, for tonight. I think he has to change it up a little bit.
Pieces are in place for some storytelling. When you look at the guest list, Jeannie, much has been made about those who did not accept the First Lady of Ukraine and the widow of Alexei Navalny. But Joe Biden's going to point up to that box, and he's going to call out Latoria Beasley, a woman from Alabama who was awaiting an embryo transfer as part of her in vitro fertilization treatment when her procedure was canceled due to the state Supreme Court's ruling. Sean Fain is going to be asked to stand up, the head of the UAW. The Swedish Prime Minister will be there. Jeannie, what do you think of this lineup and the contours of the speech that will surround these names?
It's incredibly important, and I'm so glad you raised the woman from Alabama. We can add to that Katie Cox, who was unable to get an abortion when she needed one for medical reasons, famously in Texas, and had to leave the state. That is all going to be part of a really important theme in this speech, which is to juxtapose what is going to happen if the country goes back to a Donald Trump and hands the country over to the MAGA Republican Party of today, which is the president is going to make the case that you can bet we are going to be looking at a federal law banning the right to choose. I mean, just take a glimpse at who the Republicans nominated for the governor of North Carolina just Tuesday. Somebody who famously says there should be no right to choose and there should be no grounds for exceptions to that right. Look at Alabama, look at Texas. So he's going to use the issue of reproductive rights. We know that. He should use the issue of NATO, really importantly, the idea that we have a representatives from Sweden there. If you go back a few years, nobody would think that Sweden would be joining NATO, and yet they are the 32nd country to join because of what Russia has done, and the House needs to, specifically the GOP, fund the Ukraine war. Most Republicans want to. They've been held up by this recalcitrant end. So he's got a lot of those themes, and those guests are going to play right into them. I'm glad Sean Fain is going to be there. I think he has done something incredible with the labor movement, the UAW strike, the president first to go out there and to join a line and strike and got the endorsement. Sean Fain, somebody he needs there. Maybe he helps pull some of his members over. So the lineup of guests is critical. Of course, wish the Ukrainian First Lady and, of course, Navalny's widow were going to be there. But, of course, there's very good reasons they are not attending.
Well, as Jeannie talks about the issue of Ukraine, funding for which still has not passed in the House, it's worth noting, Rick, that even though we just had a conversation about how this is a campaign speech that the president is making to the American people, he is also there physically in the room with the entirety of Congress. How much does he need to use this as an opportunity to make his case, not just for that supplemental emergency funding for allies, but also for a border deal that the House has refused to take up?
Yeah, I think outside of talking about the strength of the economy that he's produced as president, the single most important thing he has to address is the porous southern border. It is now the glaring defect in his administration, especially anything related to domestic policy. This shines above. And we see in the public polling that it is emerging as the #1 issue in many states across the country that voters are concerned about going into the election year. So I think he has to be very direct. We have talked ever since the Republicans failed to pass the more comprehensive reform as part of the supplemental, that this was an opportunity for Joe Biden to pounce on. And nothing has been done. He goes down to the border. He doesn't say anything about a new policy or get tough. This is his chance. I know that the Biden people I've talked to, the the supporters he has around states, are desperate for some signal of strength coming from this administration that gives them a talking point on the border different than what they had going into the speech tonight. Question is, does he deliver?
We've got less than a minute here. Jeannie, we heard from the Chief of Staff, Jeff Zients, talk about raising the bar. You're going to see a very energized president, he said. This is a big moment, and this president rises to those big moments. Is the White House making this more difficult than he needs to do? What, is he going to swing in on a rope?
Gosh, wouldn't that be something? We will be there to watch. I think they are making the point that he is vigorous and we are going to see the real Joe Biden out there as we did last year. I think they are hoping that happens. But as your previous guest was just talking about, there is a danger to that because these things will go viral if he does have a slip up. So these are high stakes for the Biden team tonight. But again, nobody more experienced to do this tonight than Joe Biden.
All right, Jeannie Shanzano and Rick Davis, our signature Bloomberg political panel, Bloomberg Politics contributors who will be joining us for our special State of the Union coverage this evening. Thank you for joining this hour and looking forward to seeing you later on tonight. It's going to be another long one, but we're here for you on Bloomberg TV and radio. 8:30 p.m. Eastern Time is when that will begin, Joe.
You said it. I'll be there. You'll be here. Rick and Jeannie on board, which
team.
is really, this is the team you want to be with. Walking up to the speech and deciphering everything that the president said, as Kaylee mentioned. 8:30 p.m. Washington time. We'll see you on Bloomberg TV and radio. Let's get you up to date on world and national news now. Amy Morris has that in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Sweden has formally joined NATO. The membership was held up by objections from Turkey and Hungary, but Turkey ratified Sweden's admission earlier this year. Hungary did so this week. Fed Reserve Chair Jay Powell, suggested the central bank is getting close to the confidence it needs to start lowering interest rates.
We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Powell's remarks add some additional color about officials' thinking around the timing of the first rate cut. President Biden set to propose increasing the minimum tax rate paid by major corporations to 21%, eliminating breaks for companies with high-paid executives. Gallup editor-in-chief Muhammad Yunus says tonight's speech, the State of the Union, is his chance to turn his numbers around.
This is probably the most important speech he's going to give the American people. President Biden right now is historically behind every single president except President Carter on 5 to 6 of the most critical metrics that we've relied on historically to gauge how strong a president is.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with a headline from the Bloomberg Professional Service. Rivian is pausing plans for a new EV factory in Georgia. Rivian shares are surging right now by 14.5%. Again, Rivian just getting word they are pausing plans for a new electric vehicle factory in Georgia. Rivian shares surging now by 15.1%. Stocks higher across the board. We are looking at the best level of the day right now on the S&P 500 index. Also looking at a record right now on the S&P 5158, higher now by 1%. The old closing high 5137. Stocks are advancing with the S&P pushing higher again by 1%. The Dow up 156 now, up 0.4%. Tech stocks the outperformer with NASDAQ up now by 1.6%. The NASDAQ 100 index doing a little bit better, up now by 1.7%. 10-year yield 4.11%. The 2-year 4.52%. Spot gold right now up 0.4%. 21.57 the ounce. Crude turning negative, down 0.3%. West Texas Intermediate crude 78.86 a barrel, and Bitcoin today up 1.6%. 67,554 on Bitcoin. Now let's head back to Balance of Power and Joe Matthew and Kaylee Lyons.
Bloomberg's Charlie Pellet with a look at the markets on this Thursday. Thank you so much. But of course, it isn't just any ordinary Thursday here on Bloomberg TV and radio live from Washington. It is the Thursday on which here in Washington, President Biden will be delivering his State of the Union address. And this was the subject of today's Wall Street Week Daily with David Weston as he sat down with Lord Mark Malloch Brown, who is the Open Society Foundation's president, and started by asking him what he would like to hear in tonight's speech. Take a listen.
I think what we won't hear is very much, so I'd like to hear more, but I think a year ago he had a great foreign policy record. He was standing up to Russia in Ukraine. He'd reversed the setback of the Afghan withdrawal. He looked as though he was really rebuilding a powerful transatlantic relationship. This year it looks a lot messier. Ukraine is stalled. There is a horrible setback with the sort of Israel-Gaza situation and showing up in these large numbers of uncommitted voters in some of the primaries. So I expect there'll be quite a lot of silence on foreign policy, but a rather eloquent silence and for its omission. What would I like to hear, though, is, a attempt to relaunch the kind of international rules-based order. This is what has given America 3/4 of a century of prosperity since the Second World War. But there's a real sense, I think, amongst many Americans and certainly amongst people around the rest of the world that it's running out of room, that it's deteriorating, that there are too many double standards around the international order, and that most countries, including the United States, are very selective in their respect for the rules and principles of that order. So, we seem to be moving towards a much more chaotic and difficult world.
There's a lot of talk about that international rules-based order and the shape it is in. A lot of people don't think it's very good. But you suggest a couple of different possibilities for that. When it was created after World War II, the United States really was far and away the leader economically, militarily. That disparity has come narrower over time. How much of the erosion of the international rules-based order is just because the United States is not as towering as it was before? How much is because of some of the inconsistency, the double standard that you referred to?
Well, I think in part there is a sort of, the United States, when it's stood tall really as the only last standing superpower, was able to, impose that order, even then, frankly, somewhat selectively. But nevertheless, it was the world's policeman, and that role has clearly declined. And you can choose your date, and some may go all the way back to Vietnam, but I think the forever wars of Iraq and Afghanistan are probably a more realistic turning point, at the same time as you've seen this massive redistribution of global GDP. The United States still is the strongest economy in the world, but it's got a new generation of rivals, China, India, others, racing up in its rearview mirror. And these two facts together, a deterioration of United States military dominance and of its economic leadership, are combining to create a much more multipolar world.
That suggests we can't go back to where we were. Even if we wanted to, we couldn't go back to it just because the facts on the ground have changed. What is a new role that could evolve for the United States and for its partners around the world that could reestablish some form of international rules-based order?
Well, at its best, the United States is still, the sort of high priest in a way of the values of an open, liberal democracy. It's what this nation was founded on, and it was a great exporter of it in many years after, throughout the 20th century, frankly. And, there is a chance possibly to recover that sort of moral high ground, but it would have to lack some of the sort of selectivity of the past. It would have to have a universality which, frankly, was not always there, even in that heyday. And, I don't see American politics as ready for that. You've got a highly divided domestic political situation, none of the old consensus on foreign policy, a few common enemies for Republicans and Democrats alike, notably China. But otherwise, a American foreign policy which veers in quite dramatic, unpredictable ways, and certainly doesn't seem to have a consistency of principle at its core.
Here at Bloomberg, we do a lot of talk about investing and markets. And typically, investors are loath to try to discount for geopolitics. It's so hard to do. At the same time, geopolitics plays such a role today, unlike any time it has in the recent past, at least. What does everything you're saying mean for an investor? How do they take that into account as they make their decision?
Well, I think it really is a reversal of the world that most investors grew up in, where economics drove geopolitics. It's now a situation where geopolitics drives economics, and therefore, it is absolutely critical to any boardroom strategic decision about investment. We're clearly seeing, issues of resilience and spreading risk, shaping supply chains in a way that has not happened before. It's no longer just about cost, it's about risk. And, in a very real way, the world economy is getting restructured along geopolitical lines. Now, people often jump from that to say it's less global. That's not the case. I mean, global trade continues to grow, but it's growing within this new paradigm of a kind of competitive world rather than a collaborative world.
We have the State of the Union address against the backdrop of a presidential election this year, of course, and it looks very likely the two candidates will be the President Biden, and the former President Trump. I wonder, from your point of view, how much difference does it make? Because there are some who suggest there are some commonalities, particularly in international affairs. Mention China. A lot of people think they're not that far apart, for example, in China. On some of the trade usage to protect jobs in the United States may not be that far apart. As viewed from outside the United States, is there a big difference between these two policies?
I think on China and trade, you're right, David. There's a lot more coincidence than either side are probably willing to acknowledge. But on a range of other issues, not so. And, probably most notably the transatlantic relationship, where, there was a huge collective sigh of relief when Trump was defeated by Biden, and now equal, if not greater, alarm at the risk to NATO of his return. But I think, in a way, what really alarms people about Trump is, rather than the sort of classic transatlanticism and predictability that came with a Biden, or comes with a Biden, is the unpredictability that comes with Trump.
Mark Malloch-Brown, the president of the Open Society Foundation, speaking with our colleague David Weston earlier in New York as we look ahead to the State of the Union address. That's tonight. The stage is set. We'll be talking more about it throughout the day here with special coverage as well, beginning at 8:30 p.m. Washington time here on Bloomberg TV and radio. Join Kaylee Lyons, myself, and our signature panel. Rick and Jeannie will be with us to walk through the speech and bring analysis Following that, we'll also have, of course, the official Republican response as part of our coverage later on. Saleha Mosin drops by next, the host of the Big Take DC podcast, as we turn to Trump's legal woes. This is Bloomberg.
Listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
On this State of the Union Day, we welcome you to the fastest show in politics. I'm Joe Matthew in Washington, alongside Kaylee Lines ahead of our special coverage later. We're also going to, of course, have the late edition of Balance of Power at 5 p.m. Eastern Time. Kaylee, we're giving everybody an opportunity to get ready here, pop the corn, and decipher what's going to happen tonight. You've made the point pretty eloquently that we've got two jobs here, and when I say we, I mean him, Joe Biden. Yes, it's the State of the Union, and he's the President of the United States. I don't know if he'll say the State of the Union is strong. That'll be something interesting tonight, how he couches that phrase.
Sure.
But he's running for re-election, and this is officially candidate Joe Biden who's going to be speaking as well tonight.
Absolutely, and he'll be speaking to one of the largest audiences he's going to be able to gather simultaneously to listen to his message. Between now and at least August in the Democratic Convention, we'll have another opportunity to give a high-profile speech, but certainly this is one of just a few chances he's going to get this campaign cycle to reach an audience this big. And of course, as we've been hearing over the course of the last week when asking people what their expectations are for the speech, that it is about contrasting with his predecessor, but also a likely opponent in November, Donald Trump. And on the subject of Donald Trump, that's something that's discussed in this week's Big Take DC podcast. The host of that podcast, Saleha Mosin, Bloomberg senior Washington correspondent, is joining us now. And Saleha, in this week's episode, you're looking specifically at Trump's legal troubles. This is a financial consideration as well, as he is simultaneously trying to pay defense attorneys and legal fees and finance an active presidential campaign.
Kaylee, we're looking at the legal angle, the campaign finance angle, and the angle of electability. Will he still get votes? And the exciting thing about this episode is we leveraged a group of our reporters called the Road Warriors who hit the campaign trails. They attend Trump rallies. They've hit all of the other GOP primary candidates. They attend Biden events. And I have tape. You will hear on this episode voters, the voices of voters that are part of Trump's base. And we ask them, you hear the reporter ask the question, will you vote for Trump if he is jailed, convicted? And we got a lot of yes answers. We got a lot of enthusiasm that, yeah, if he's jailed, I still think I want him as president. They have this Trump nostalgia for that era of his presidency.
We've talked to a lot of voters as well, Trump supporters, who told us the exact same thing in Iowa, in New Hampshire, in South Carolina. We certainly, I think we can underscore that in Super Tuesday states, I should say, with that same sentiment. Our polling, though, would suggest that people might feel differently with a conviction. If this actually goes that far, if their $25 payment did not help him win, will they still pull the lever for a convicted felon?
And that's the interesting thing, Joe, right? Like when we look at polling and the voices that we have on the podcast this week, we're talking about how people feel right now. This is not necessarily exactly how they're going to vote in November. And it's hard to really absorb the depth of what that means because we all think, you know whether you're going to vote or not. Might as well have the election now. A lot of things happen. A lot of things unfold. When you get to a polling booth and you see the American flag everywhere, you go, it's this official document. You showed your driver's license to go sign up. You mail your ballot. It's a moment. You don't always know necessarily how people are going to vote.
And for our audience that's watching on television, and I'll describe the footage to our radio listeners, we were just looking at Trump with his golden sneakers that he's now shilling and as an attempt to raise money. Just to go back to the financing part of this, we know that President Biden has a massive war chest to deploy over the next 8 months for this incredibly long general election. How much is Donald Trump going to need to be pulling in, and frankly, from who? If he's keeping the pace of legal expenditures as we've seen over the last several months, and then also trying to do the ad buys, trying to finance all of the typical things that would come with a presidential campaign.
It's a lot. He is dealing with 4 federal trials that amount to 91 felony counts. There are 3 civil cases. One has been settled, but they're all sort of being appealed. They're all open. He has a lot of legal fees. He also needs to put almost $500 million into escrow.
Right, for one
He's
of those
going to appeal
cases.
or delay, but he needs to put that in his liquid assets. He himself has said they're around $600 million. So he'll tap all of that. Now, he is valued by the Bloomberg Billionaires Index as having assets worth $3 billion. He would have to sell a lot of his real estate and other holdings in order to tap into that. He can use campaign funds he can't use it for any of the cases where he's being tried as a private citizen. Any of the so E. Jean Carroll.
Right, those civil cases.
Those civil cases. But when it comes to the January 6th case and a couple of the other ones, he can actually tap those. And, we're going to find out tomorrow. The Republican National Committee is meeting. He has endorsed his daughter-in-law, Lara Trump, to be the chair. And she has said, if I'm chair, I'm going to direct funds so that he can finance some of his legal issues.
She's the host of the Big Take DC podcast. Saleha, thank you. Saleha Mosin with us. Find the podcast, as you will all of Bloomberg's podcasts, on Apple, Spotify, wherever you do that stuff. Subscribe, and you'll hear exactly the words that Saleha is talking about from voters here in the campaign cycle. Kaylee, it's time to pass the baton to New York. Carol and Tim are standing by for Bloomberg Business Week. Hey, Carol, you can't avoid Washington today. Jay Powell's talking. You guys are listening.
We are indeed day 2, but I feel like I said to Tim a little bit, I'm feeling a little bit of a Fed fatigue. Like, okay, got the message, let's move on.
How do you think Jay Powell's feeling after 2 days of being grilled by lawmakers?
Scotch tonight?
Yeah.
Double header? I
maybe.
don't know.
Not envious. Not envious.
Yeah,
I feel like he had some zen this time, though. He's relaxed.
It takes
he
a lot
feels
of
like he's
patience.
turned the corner. Maybe it's just me.
Maybe it was Scotch last night. We do have stocks at a record, though,
Yeah.
guys, hitting all-time highs again. So, off and running. Rate cuts.
I love it.
When is it going to happen?
That's the conversation coming up straight ahead with Carol and Tim, our colleagues in New York. Kaylee, we've got a big night ahead. I'll meet you at 5 o'clock. Bloomberg Business Week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week on this Thursday, March 7th, 2024. Carol Masser along with Tim Stenevec. Got to say thank you, central bankers, because, Tim, the prospect of rate cuts around the globe, sending U.S. stocks at least to all-time highs.
Yeah, S&P 500 up by more than 1.1%. The NASDAQ 100, Carol, up by 1.7%. The SOX at a record high, NVIDIA at a record high.
Thank you, semiconductors, again.
Yeah, again.
All right, this as Broadcom gets ready to report after the closing bell. All right, everybody, we're going to talk a little bit more about what Jay Powell had to say day two as he was up on Capitol Hill. Message rate reductions can and will begin this year. So we're going to talk with our own Mike McKee, who's been following it word by word, and also get into some of today's economic data.
Okay, also not so bad for a day's work, okay? Former Secretary of the Treasury, Steve Mnuchin, and team scoring an instant profit as they take control of the ailing lender, New York Community Bank. We're going to have the latest on that.
We are indeed. That's a most read story. So, too, is the tale of how Apple sank about $1 billion a year into a car it never, ever built. Great behind-the-scenes storytelling by our own Mark Gurman, so we're going to dig into the details of that one. It's a great read.
Also, we travel to the luxury real estate scene.
We do?
We're going to stay here, but South Florida, the luxury real estate market there. We're going to get an update from on the ground where there's several very, very expensive condos for sale, Carol, if you're interested.
Yeah, bottom line, we can't afford it. First up, though, someone who does travel around a lot is our own Charlie Pellet. He's got a check on the day's trade and your top business stories. Hey, Charlie.
Hi, thank you very much. Good afternoon to you both. Focused on the state of the markets right now with the Dow, the S&P, NASDAQ all pushing higher. And right now we are looking at a record just off session highs, but a record nonetheless on the S&P 500 index. We're up 58 right now, up 1.1%. The number to beat for another record on the S&P would be 5137. Right now we are at 5163. The Dow up 208, now up 0.5%. NASDAQ up 271, up 1.7%. 10-year yield 4.10%, with a 2-year now yielding 4.52%. Gold up 0.4%, 21.57 the ounce, and West Texas Intermediate crude down 0.2%, 78.98 a barrel on WTI. Bitcoin up 2.1%, 67,858 right now on Bitcoin. Shares of the supermarket chain Kroger surging after the grocer's full-year adjusted profit outlook beat analysts' expectations, making it the latest retailer to offer an upbeat outlook as customers show resilience. Kroger shares, they are advancing. We've got Kroger up now by 9.34%. Broadcom reports after the closing bell. Again, recapping stocks higher. S&P up 60 right now, up 1.2%. And that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Well, Fed Chair Jay Powell, as you know, back up on Capitol Hill, day two of his semi-annual testimony before U.S. lawmakers, did say the Fed not far from the confidence needed to cut rates and that rate reductions can and will begin this year, while noting policymakers are well aware of the risks of cutting too late, Tim.
In the meantime, another set of data points here in the U.S. today, including weekly jobless claims remaining below pre-pandemic levels for a fourth week. So we have back with us to tie everything together, international economics and policy correspondent Michael McKee. He's here in our Bloomberg studio at headquarters in New York. Mike, you were in D.C. yesterday. You're back here today for day two of testimony. How would you characterize the differences between what we saw from the House yesterday and what we saw from the Senate today?
It wasn't much of a difference. Senators moved faster. There were fewer from on the committee, so the hearing didn't last as long. But the questioning was pretty much the same thing. They did spend a little bit more time on what it would take to cut interest rates, and there were some protests from a couple of senators about interest rates hurting home buying and the consumers in general, and the Fed should lower interest rates. But then they spent a lot of time on banking again, and the Basel III regulations the Fed is considering. That got a lot of attention from the senators. There's a little bit on the balance sheet, but it was pretty much the same as yesterday, and certainly Jay Powell didn't break any new ground. He sounded maybe a tiny bit, a couple of basis points more dovish, which is, you saw basically.
It's like when you have two kids,
Yeah.
right? You bring the first one home, you're nuts, you're obsessed, you stare at them constantly, and you bring home the second kid. So I hear, I only have one. But you bring home the second one, you like put him in the bassinet, and you're like, go and do a load of laundry.
I
Like,
could
it's-
loan you one.
No, one is enough. But you know what I
Yeah.
mean? It feels like a lot more relaxed, and we kind of know what we're going to
Yeah,
probably
I mean,
get.
the market added a little bit of a possibility of a May cut and a June cut today, but it didn't really move the needle on things, and I don't think people expected it to.
Yeah.
Why do you think there was that movement in the May cut then, the idea of a May cut?
Oh, people are always just adjusting one way or another, and we had an ECB decision today and a Christine Lagarde press conference, and they changed their forecasts for things. So there was a lot of movement in the markets right after they did that, and so that probably feeds into it too, as people are adjusting their positions on relative interest rates but this falls into what we saw today falls into the category of noise.
You know, we always kind of push with you, Mike, kind of the data today that we got, weekly jobless and just the data backdrop. I mean, does it kind of continue to come in the same, showing strength? But I don't know, are we seeing any signs of kind of things slowing down? It feels like it supports the strong story that continues to be out there.
What people were talking about in Washington yesterday, and I've talked to other Fed folks over the last couple of days, is that the data are kind of frustrating in the sense that they feel the risks are kind of balanced right now between growth picking up or growth falling off. And the data don't give them any clear direction. Some of it's a little weak, like the ISM. Some of it's a little stronger, like the jobless claims. And so they don't have a good signal here, which just kind of reinforces the idea that you want to wait and get more data, which is where Jay Powell was over the last 2 days. Is we're close, but we need to
more
see,
data.
We need to
Like inflation next
believe
week
it.
and-
Something.
Okay, well, speaking of more data, tomorrow, February jobs, 200,000 is what economists surveyed by Bloomberg are expecting. It was a blowout number for January. And the next week, CPI. Which one's more important?
CPI, because the Fed is focused on inflation. Jobs report, if it came in at 200,000, everybody's going to go, oh, wow, this is a lot weaker than last time. But it was that January was extraordinarily strong. It'll be interesting to see if that's revised down at all. 200,000 is stronger than we had seen in the fall going into December, January. So it's not a weak number at all. The Fed would like to see something around 100,000 a month that would suggest to them that things have slowed down and wages aren't going to keep rising. So 200,000 will be pretty strong. But it's CPI that they care about. It's inflation they care about, and they'll get more clues to that next week. And we'll be seeing if the stronger inflation we saw last month continues, and that's what they're concerned about.
Tomorrow's report, we just kind of walked through it. Is it just a big drop or a big gain that would make people start to rethink things? And I know it's a 1 month report, and we always say that, but I'm just saying if it varies significantly from the forecasts to the upside or downside.
That could lead to a recalibration. You have to be careful with that because right now we're not expecting anything in March, so we're not talking about anything until May 1st. So you're projecting out a lot. But yes, if they got well over 200,000 or well under 200,000, then people are going to be looking at that as saying maybe we've reached some sort of inflection point where the economy is now going to get stronger, or it's going to get weaker, and that'll change our thinking about the Fed.
One last question. The last couple of days we talked about, you noted both times how much was spent on, banking rules and requirements, if you will. We talked Basel III and so on and so forth, versus really kind of the economy. Not normal, right? Or what? This semi-annual testimony, this environment.
Well, it's in this environment, and the fact that the Fed talks a lot, people have a pretty good idea what they're thinking, and they haven't been pushing one way or another.
Right.
So I don't think even the members of Congress were confused and asking Jay Powell to straighten them out on monetary policy. But the banking issues are a big issue, especially to the banks in all these congressmen and senators' districts. And the banks have been lobbying their legislators very hard on this, and it obviously got through. There was a thought going into these hearings that Republicans would be really pushing Powell to back off of this, but a lot of Democrats were as well.
So there is agreement across the aisle on some things in Washington.
there is bipartisan agreement, and then there's Elizabeth Warren, who lambasted Jay Powell for even thinking about changing the regulation.
There's some interesting parts of the testimony. It's a family show, so we can't go into it, but nonetheless, it was an interesting day.
It was a very interesting
day.
testimony, yeah.
All right, Michael McKee, our international economics and policy correspondent. Thanks so much. All right, so let's go, Mike, finishing off on banking. And, New York Community Bank Corp, Tim, continues to be on our radar because it's soaring again. And there's a great story. It's a most read story in the Bloomberg, really giving us some insight into the deal and kind of the instant paper profit that these individuals are making.
Yeah, we're talking about individuals such as U.S. Treasury Secretary Steve Mnuchin, who, along with his Liberty Strategic Capital, led a group of investors that injected more than $1 billion into New York Community Bank. And this could only be the beginning. With more on the Mnuchin playbook and what is a most read story on the Bloomberg, with us is Bloomberg's Catherine Doherty, finance reporter at Bloomberg News here in our studio. So Catherine, it was interesting as this all played out yesterday. Carol and I were on air, and the stock was halted multiple times. But one thing that we did notice after our Bloomberg News team broke the story was that by the time it started trading again, it was above the price of $2, which is the price where Mnuchin and team were able to buy in at.
That's right. They've already minted quite a profit.
On paper, at least.
On paper, but it looks like it's holding out today. So it's been 24 hours or so, or as we're getting to that point. So it's not to say that this is a forever proven strategy. They're going to have a lot of work to do. It's not just the investment and the number, but it's actually how do you turn this ship around and how do you get your heads together and bring in the best of the best to make sure that this bank has a future. But the share price is reflecting investors' sentiment, a positive sentiment, and their belief that these leaders, and it's not just about the money, it's the people that are behind it, that presumably the bet is that they will succeed in turning the ship around.
Let's talk about that and the Mnuchin, Steve Mnuchin playbook, because this is what's interesting. And this was some of what we were getting yesterday, that these are people who are respected investors, kind of know how to deal with this kind of situation. What's the playbook? And let's kind of maybe go backwards, right, to IndyMac, because he's kind of bringing the gang back together, it seems.
So back in 2008, IndyMac, which eventually turned into West Bank, I believe was the name, and Joseph Otting was the CEO of One West, of that firm. But today, again, bringing the band back together, Otting is the CEO of NYCB now, and clearly this is the relationships that have been built in the past, the trust and the knowledge that these leaders have gained in not just finance but in banking, which is a very specific industry to have some of these very strategic plans that they're going to need to set forth in terms of how to diversify the bank, how to deal with the existing problems that they've already identified. And today they started talking about that to investors.
Well, that's what I want to hear from you. And what do we understand now that they're talking about this, how they shore up the balance sheet, especially exposure to commercial real estate?
So executives today talked about the main issue being the loan portfolio and this portion that is specifically linked to New York office. So they're saying that their goal over time is to diversify the bank. Essentially what they want to do is make this bank look more like the other regional banks, because right now there's so much concentration in real estate, in lending to the landlords of New York City.
Yeah, and we've talked about this, that the law changes and stuff has really kind of changed the financial outlook, if you will, of these assets or the profitability. One thing I want to ask you about, so as they kind of move forward, investors, the stock's up 13, 14% just in the last 2 days alone. But, the IndyMac deal, go backwards for a second, there was some criticism of the duo and their past link up ultimately. So it'll be interesting to see how they kind of deal with all these assets. That not any deal going forward is ever maybe perfect.
That's right. And so that deal with IndyMac was linked to mortgages.
Correct.
This is lending. So it's a different business. Essentially, the lending to real estate firms and to buildings, both for businesses and for landlords, so for commercial real estate and also for housing. Again, these are going to be, that's different than lending out or giving a mortgage to someone if they're buying a home.
What do we know about the where the money came from for Liberty Strategic Capital at this point, and what the former Treasury Secretary has been doing over the past few years when it comes to fundraising?
So Mnuchin, there has been some pushback, which was referenced in this story. There's been some critique because after he left being Treasury, he was raising money for Liberty from sovereign wealth funds in the Middle East. And that includes Saudi Arabia's public investment fund. That is something that was under scrutiny. What I found interesting is that with this deal, Mnuchin was saying that they initially went out with around 700, and there was so much interest that then they raised it to the 1 billion mark. So it just showed that the enthusiasm that we're seeing reflected in the stock price from other investors was also there when they were pitching this deal to the street.
Yeah, it is interesting, like kind of when you go through it and you look backwards in terms of the IndyMac deal and just these individuals that have been assembled to kind of, again, not apples to apples in terms of the bank, but dealing kind of with a, I don't want to use the word crisis, but certainly a very troubled situation and trying to figure kind of the way forward, right?
Well, financially, it's a troubled situation, and they're buying in at such a cheap price. These are the types of deals. Think about Warren Buffett coming in and supporting Bank of America in its time of crisis way back in 2007, 2008 period. And look how that turned out for him. Again, that was a windfall, and it was also a lifeline for Bank of America. So it's a very similar narrative that I think a lot of people are comparing this moment in time to. You have a bank that has fallen on tough times. The share price is showing that. And already the deal and the investors that bought in early have minted a profit. It's on paper.
Well,
yes.
I was going to say it's only day two,
right?
Or like day one, I
Right.
guess you could say day one full day, and they're not out of the woods yet, Kat.
No, they're going to need to prove that they have the strategies in place. They outlined them this morning, so I think that is another reason that you've seen the share price remain at a higher level. It didn't jump significantly from where it already jumped yesterday. It's still around the $4 mark, just below last time that I checked. But you're absolutely right. This is a strategic playbook that they're going to need time to show that it's actually working. And I find it interesting, the goal of being more like their peers, but this is a large organization because they bought assets from Signature earlier and they've grown rapidly. That was part of its struggle. They didn't know how to deal with that size that a
lot of pieces there.
A lot of pieces of the puzzle.
All right, Kat Doherty, finance reporter at Bloomberg News. Thank you so much. From one of the most read to another, that on the other side. This is Bloomberg.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the U.S. stock market trading at a record right now with the S&P up 1.1%. 51.62 is where the S&P stands right now. The number to beat for a new record would be 51.37. Again, the S&P up now by 1.1%. The Dow up 174 points, up by about 0.5%. NASDAQ, the composite index, up 1.6%. The NASDAQ 100 index, full of big tech names, doing a little bit better, up by 1.7%. The 10-year 4.10% with a 2-year at 4.52%. Stocks climbing to records in the run-up to the jobs report tomorrow morning. Spot gold now higher by 0.5%, $21.58 the ounce. West Texas Intermediate crude oil down 0.2%, $78.98 a barrel on WTI, and Bitcoin up 1.5%, 67,490 now on Bitcoin. Victoria's Secret shares are plunging after the beleaguered laundry maker's full-year sales guidance fell short of analyst expectations. The shares of Victoria's Secret right now, they are plunging by 30.9%. Again, recapping, stocks higher, S&P at a record, S&P up now by 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, folks, this is one of those stories that while you're doing, at least we are, doing our early morning read-in, you stop, you actually read all of it, the entire story, because you actually get a peek into the inner workings of one of the best-known companies in the world. It's also, Tim, one of the most valuable companies in the world.
Yeah, we're talking about none other than Apple and how its nearly decade-long journey to build a car came to a dead end. With the insight and the inside story of the long and winding road of the Apple car, with us we have Bloomberg News Chief Technology Correspondent Mark Gurman, who joins us from our San Francisco bureau. His story also today's big take. Mark, like Carol said, I could not put this story down when I saw it cross the Bloomberg late yesterday. Where does this start?
Yeah, thank you, Tim and Carol, so much for having me. This starts around, 2008. Steve Jobs gives a presentation at the Apple headquarters, and he says, Apple needs to own home, business, and on the go. The Mac had started to do pretty well at the home and business. Apple had the iPhone. They were a few years away from the iPad. But what comes after that? And he imagined it was a car. I spoke to Tony Fadell, who's known as the father of the iPod, and he said that Steve would raise the question, what's going to be the Volkswagen Beetle for the next generation, right? But no car ever really got worked on or came to fruition. It wasn't a big idea under Steve Jobs that the company tackled. But then Tim Cook comes to play. This is tail end of 2013, early 2014, and Apple's mergers and acquisitions chief, Adrian Perica, who used to be a Goldman Sachs banker. He starts holding a series of meetings with Elon Musk. The Model S had just launched. Tesla had started to become popular, but it was nothing like it is today. This was $20 to $30 billion market cap at the time. And they start getting down the road a bit on an acquisition. Tim Cook shoots it down. It was still in the early innings. There were concerns about integrating the EV maker. There were concerns about the profitability and the margins of the car business. But then Apple said, why don't we try to tackle this on our own? So they developed Project Titan. Their hardware chief at the time, Dan Riccio, was given a budget, about $1 billion a year on average over the past decade, to develop this car. They started off by looking at things that were similar to cars at the time, basic EVs, no autonomy. And then they got the big idea to build what essentially amounted to a private jet or a living room on wheels that could drive itself using level 5 autonomy. And they had some incredible aspirations. And then between indecision, technological challenges, market realities, it all fell apart, and our story details exactly how.
I got to tell you, so, all right, Project Titan, as you said, it was called, or should we say Bread Loaf? And to me, those different names, Mark, speak to kind of the tensions internally as Apple pursued this route of a Apple Card. Not everybody was always on board. In fact, some often were not, right?
There was a lot of indecision and a lot of disagreement, not only in the Apple Car team itself, which is known as SPG or the Special Projects Group, but there was a lot of disagreement on Apple's executive team. For instance, Eddie Q wanted Apple to just sort of make a better Tesla and start off slow. Tim Cook, Jeff Williams, people on that side were really pushing for full level 5 autonomy. Apple's software engineering chief, Craig Federighi, Apple's new hardware engineering chief, John Turnus, they really weren't on board with the car. Apple's marketing chiefs, Phil Schiller and Greg Joswiak, they were not on board with Apple developing a car that looked nothing like a car. They wanted Apple to make a car for people who loved cars, not a car for people who hate cars, which is the type of car that a person who doesn't like a car would want, a car that you don't have to drive, one where you can just hang out in the back and FaceTime and watch TV. Right. So there was all this disagreement from start to finish, and obviously, as Tim said, it ended up at a dead end.
Mark, is that disagreement atypical for the product development process? Because I think it's fair to say that some of the products that Apple has developed have absolutely, no question, been visionary to a lot of people. Are there the naysayers along the way, and that's part of the product development process that creates something in the end that is successful?
You know, I would say the Vision Pro had a similar history of naysayers, people really against the product, similar disagreements from similar people, but that still came to market. But the market realities of the Vision Pro are far different. Right? You're able to sort of squeeze out your normal Apple profitability, or they will be able to do so. It does integrate into the Apple ecosystem nicely. The car is a totally different beast with a totally different investment necessary for it to happen, totally different levels of distraction to bring that type of vehicle to market. So certainly the Apple product development process always includes lots of disagreement, lots of debate, lots of screaming, lots of people saying they're going to quit, lots of people who say you're being fired, but you know what, come back the next day. Totally normal in this process. But this, of course, Titan, this was the biggest Apple product bet essentially since the original Mac, right? One of the biggest bets in modern technology history. For the iPhone maker, for the iPad company, for the Mac company to create a self-driving vehicle. This was a huge bet, and it really just fell flat on its face.
Mark, I have to say, you know, not only was the internal struggling inside Apple interesting to read about, but also, you know, there were external reaches that Apple made, whether it was Tesla, whether it was Mercedes-Benz, McLaren, BMW. I mean, Canoe, exactly. So like, while Apple so loves to do things right their own way, they did make outreaches, and yet that didn't come to anything either.
Yeah, it's interesting. Like I said, the origin of the Apple car wasn't necessarily building the car. The origin of the Apple car was investigating and exploring what would it take to buy and integrate Tesla and build upon Tesla into the company. Now, there were many fits and starts over the decade. There was a period where they slowed down development of car hardware and focused more on the AI self-driving brain underlying it. And of course, you wanted to have partnerships in your back pocket. If that autonomy system worked out, what are you going to do with it, right? Who are you going to sell it to? Who are you going to license it to? They got down the road on a partnership with Mercedes-Benz. It took a couple quarters for that to fall apart when Apple got so excited about the prospect of its user experience and its self-driving brain. They said, you know what, let's just go back to doing it ourselves. Canoe is so interesting. That is basically a failed EV maker. And the design that Apple toyed with for the Apple car for many years looks very similar to what Canoe ended up announcing.
That's interesting. Hey, Mark, one of my favorite parts of the story was all of the features that, for the first time, I read about in your piece that Apple toyed with, whether it was automatic tinting of windows depending on the light conditions outside, or the idea of like patching in the audio from outside inside the car, which struck me as, look, I'm not a car designer, but struck me as something that I would not want as a consumer. Take us through some of the greatest hits that were put on the drawing board and ultimately pulled off.
Well, I think some of the most interesting work that they did was backup control to the L5, the self-driving system not working. So you had three options that they were looking at. First, basic, makes sense, is an iPhone app that lets you operate the phone as a virtual steering wheel. Obviously, the car would only run at low speeds with this control. The second was they spent a lot of time actually working on like a PlayStation or Xbox-like controller for you to sort of operate the car like you're playing in Grand Theft Auto, right? But hopefully not. And then the third thing was there would be a way to call into Apple. They would have a command center, a 24/7 command center, where you call them in and they can drive the car for you remotely with a physical steering wheel to get you out of trouble. Not trouble from the police chasing you like in GTA, but I mean if you're stuck in a construction zone or some such.
Can you just imagine
those are really cool.
The logistics of that, though? Like,
I can't even
you have to
imagine the
react
command
quickly when you're
center.
driving a car.
Right.
People honking behind you. Hold on, I got to call Apple to
Could you
take
get me out of
control of the
this?
car to get me through this.
I never want to count Apple out because I think about the impact that, Mark, they have had on our world, certainly on my world. Do you truly count Apple out, done? I know the story, I know the reporting, I respect it all, but might they some way find their way back or nah?
Let's talk about this. Tim Cook's going to be CEO for the foreseeable future. This is not going to be reversed under his tenure. A new CEO comes in, obviously they can decide to throw another 10, 20 billion at this and start over, right? But they really would need to start over, so to speak. So that's one. Two, in my opinion, the door is not closed on Apple entering the car business. It is shut a little bit. There's a little crack. It's ajar. But there is, one option. They can always go out and buy one of these car companies and use all of their existing infrastructure. So if they're going to get into the car business in the next decade, I would say the only way they do it is by buying an established automaker or even a non-established automaker, something a little bit more nascent, like a Rivian or a Lucid.
All right, 25 seconds. What was your favorite nugget of telling this tale?
My favorite part of the story, in addition to that remote command center that you both loved, was the design of the car. The white wall rims, like it looked like from something from the 1950s. Just the beautiful external white design of the car, the Boeing Dreamliner-like tinted windows, I should say. So really the overall exterior design and ideas for the interior, those were my favorite parts.
Unbelievable. And they were all going to be white, right? So that you just kind of knew?
It just remains a design at this point.
For now.
For now.
A great piece of reporting and a really incredible read. Mark, thank you so much. Mark Gurman, of course, Bloomberg News Chief Technology Correspondent. Check out his story. You can find it at Bloomberg.com and, of course, on the Bloomberg Terminal. That is the Bloomberg Big Take.
Hey, coming up next, we're going to talk about the Miami market specifically and ultra-luxury developments happening there. You're listening and watching Bloomberg Business Week. Let's get a check on the latest world and national news. We've got Amy Morris in the 99.1 Newsroom in D.C. Hey, Amy.
Hello, Tim. Federal Reserve Chair Jay Powell testified on Capitol Hill again today, this time in the Senate, where he reiterated the central bank is rethinking new bank capital requirements and holding steady for now on interest rates, telling lawmakers the central bank was not far from being able to cut interest rates and that rates were far above levels that they might be otherwise. During tonight's State of the Union address, watch for President Biden to propose increasing the minimum tax rates paid by major corporations to 21% and eliminating breaks for companies with high-paid executives. This would affect corporations valued at $1 billion or more. And as we wait to hear the president lay out his vision in this election year address, Tobin Marcus, the head of policy and politics at Wolf Research, says he expects an energetic performance from the president.
If they can manage to engineer another sort of organic moment that showcases some nimbleness and energy and sort of quickness on his feet, I think that would be ideal for them. But short of that, I think just a crisp delivery that shows some energy and sort of free of any notable flubs.
And that is Tobin Marcus. He's with Wolf Research. You can join Bloomberg Radio and Television tonight at 8:30 Wall Street time for our special coverage of the State of the Union. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. stock market trading at a record, very close to the session high right now, with the S&P at 51.59, higher now by 1.1%. The Dow up 134 now, up 0.4%, while the Nasdaq Composite Index up 1.7%. Stocks are hitting records in the run-up to the jobs report tomorrow morning as investors bet that some of the world's major central banks will start slashing rates as soon as June. Spot gold right now is up 0.5%. The 10-year 4.10%. The 2-year 4.52%. And crude down 0.4%, 78.83 for a barrel of WTI. Bitcoin up 1.5%, 67,518 on Bitcoin. New York Community Bancorp's new leader wants the beleaguered commercial real estate lender to look more like other regional banks. New CEO Joseph Otting, a former controller of the currency, was named to the post yesterday as part of an equity investment of more than $1 billion from investors, led by former Treasury Secretary Steven Mnuchin. His comments came in a conference call with analysts. So today we're looking at NYCB. The stock is up 4.5% right now. That's on top of yesterday's 7.4% advance. Year to date, however, the stock is down 63%. Again, recapping here, stocks are higher. We are looking at a record now with the S&P up 55, up 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, so appreciate it, Charlie Pellet there. Well, you might recall that Bloomberg News was reporting out last month on Florida's southwestern coast, along one of America's fastest growing regions, and how it is losing some of its boomtown swagger as a home insurance crisis and other soaring costs make homes unaffordable. It's a serious situation.
It is, and at the same time, Carol, we've also talked about how the migration of financial types down south, think Citadel's Ked Griffin, more, are now calling South Florida home and pushing up prices not just of residential real estate, but also commercial real estate, too.
All right, so there's a lot going down south, specifically in the state of Florida. With all this in mind, joining us to talk about the Miami market specifically, with us is Dina Golden-Tayer. She is Executive Director of Sales over at Douglas Elliman. She joins us from Miami. Dina, good to have you here. A lot to talk about. First up, how are you, and how would you describe the luxury market in Miami? I mean, technically, you're known as an ultra-luxury specialist. So talk to us a little bit about demand, pricing, what you are seeing.
Thank you so much for having me today. I am indeed an ultra luxury specialist focusing on properties 10 million and up. And our market, as they say, is caliente. And there is no sign of a slowdown for the 10 million plus marketplace.
All right. Drill down a little bit. So no slowing down. So the same as 6 months ago, 12 months ago. Give us some more color. We're Bloomberg. We'd love to dig a little bit deeper. Sure. Give us an idea of how it's playing out and how it compares.
Absolutely. This time last year, we in fact had a much slower high season being defined as the months of December, January, February, March, April, when the snowbirds want to be here. And this year, we're having the type of high season that we had hoped for last year, which is pending sales almost every other day for high quality assets that are appropriately priced. So if you're watching Zillow, you're going to see a lot of stuff go pending.
Who are the buyers right now, and how are they buying? Are these all cash buyers? Where are they coming from? Give us insight there.
They're the usual suspects. They are coming from New York, from other northeastern states. They're coming from California and other western states, and they're coming from Canada. The European buyer has slowly trickled back into the marketplace post-COVID, but they're not as strong as they were in prior years.
What about buyers from Asia and buyers from Russia?
No and no. And the buyers that I'm working with are not getting mortgages, or at least the deals are not finance contingent.
What's a typical deal on the high end of Miami? You use $10 million as the price point. Is that kind of the mean, the median? Give us an idea, because I know that they can go a lot higher, especially if you do something like Indian Creek Village, which Bloomberg has written about as being a place where millions don't matter. It's all about billions and billionaires.
Great article. Great job, Felipe. 10 million gets you a nice condo. It gets you a nice house, a very nice house, not on the water, an average house on the water. 20 million is where it's at if you want something better than nice. And my 20 million plus product, I have the shortest days on market than any other sector that I represent. In fact, it takes me longer to sell properties 5 to 15 million than homes that are over 20 million, where I average about 120 to 150 days on market.
Dina, who's selling right now? Who doesn't want to be there and who wants to sell for these prices?
Sure. I mean, that is a broad question because people selling don't necessarily not want to be in Miami. They may be expanding their family or they may be going through a divorce. A lot of the people that for whom I sell for, they are staying locally just in a different asset class, like downsizing or upsizing or moving from a house to a condo or vice versa.
You know, Tim was asking earlier, Dina, about who's doing the buying, and we've talked, Bloomberg has done a lot of reporting about kind of Wall Street South and the amount of financial folks that have moved down there, not only to live or buy a second home, but to actually set up shop and do work, and that has certainly had an impact on the area. Give us a little bit more color, if you can, around what you are seeing on that front specifically. Is the pace continuing? Is it picking up? Is it slowing down at all?
I think if we compare the pace to the COVID times, it will always feel like a slowdown. Now Miami and Miami Beach, where I specifically focus on, has found a new rhythm. We continue to have an influx of the Wall Street types and other financiers from around the country. They are still taking prime positions at the schools for their children and the top reservations in town because we have pretty much the same restaurants that New York City does, if not better right now. So the pace is healthy. It's just not a COVID pace. And to compare it to that would always look like we're in the red.
What about folks with backgrounds in crypto right now, especially given the rise in crypto that we've seen last year and in recent months?
I'm glad you bring it up because crypto certainly has had a great couple of weeks. But I have not seen the complete return of the crypto bros. And in fact, when I did work with that buyer class, they always paid cash.
Well, yeah, it's funny.
Cash is cash.
Yeah, got it. Yeah, no problem here. Easy close, quick close.
But I have gotten a few calls lately asking if a seller would take crypto. So it is starting to come back as a subject point.
Yeah, and I guess I was more interested in just the crypto bros part of it, but I'm surprised that you haven't seen the return of crypto bros completely that we saw a couple of years ago.
No, and even, they're already down here. They've already established residency. So if they're going to be perhaps upgrading because their crypto's high, great. I'm excited to work with them again, but they're not the conversation at the height of the topics that are being discussed around town.
Dina, this is a market you've been in since 2005. So you've seen a fair amount of cycles, including the great financial crisis. You've seen, obviously, the pandemic and then some. I am curious about how this market has evolved, how it's changed in terms of pricing and demand. What can you tell us about that? Because that's a fairly long tenure and some great insight.
Absolutely. I mean, the market has completely changed. The type of buyers that we're attracting to our marketplace, I don't think anyone thought that Miami would be competing with buyers looking at London, New York, Hong Kong, that they would look to us as their first home. It's very clear that Miami is the top city in the country right now. LA and New York don't have anything on us. Clearly, I'm a cheerleader for my marketplace, but having traveled around the country to the cities where those buyers are fleeing from, I can understand why.
Do you see, you said you saw a slowdown in sub $10 million listings. Is that the case?
Not. I would say there's higher inventory and higher days on market. I guess you could call that a slowdown, or I would just say it's not as hot as homes above 20.
Let's phrase it a different way. Where are there buying opportunities right now?
Sure. There are buying opportunities definitely in the 10 to 15 million range because those properties are having higher days on market. There are neighborhoods that are, let's call them one notch below the A-level neighborhoods, like B-plus neighborhoods, like Miami Shores or Sam Sushi or Keystone, where there are opportunities, whereas in really established neighborhoods like Miami Beach, Golden Beach, and Coral Gables, those owners are just holding.
Rates, interest rates, does it even matter? Just got about 20 seconds here.
If interest rates were lower, all the buyers would jump back in, as opposed to the cash buyers really having free reign.
Interesting. So it would kind of give more buyers certainly into the market there. All right, Dina, good to check in with you. Really appreciate it. Dina Golden-Teyer, she's Executive Director of Sales over at Douglas Elliman, joining us there from Miami. And while we're on the subject of real estate, specifically Miami real estate, we've got an interesting story coming up.
Yeah, we're going to tell you about a condo that you can have if you have a cool, well, more than $100 million lying around. But Carol, as I always say, if you have to ask, you can't afford it. This is Bloomberg Business Week on Bloomberg.
Your company news headlines on Bloomberg Radio. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Rivian Automotive is halting plans to build a new multi-billion-dollar factory in Georgia, an abrupt reversal aimed at cutting costs while the company prepares to launch a cheaper electric vehicle. Rivian shares, they are pushing higher now. We've got Rivian up by 13.3%. Novo Nordisk is touting the potential of its next-generation obesity treatments, releasing promising data on an experimental daily pill and sending the shares soaring to a record. Novo Nordisk up now by about 8.8%. Shares of supermarket chain Kroger rose after the grocer's full-year adjusted profit outlook beat analysts' expectations, making it the latest retailer to offer an upbeat outlook as customers show resilience. Kroger up now by 9.9%. Two NVIDIA directors sold about $180 million in shares of the chipmaker in recent days, becoming the latest insiders to cash in as the stock continues to push deeper into record territory. NVIDIA shares up right now by another 3.9%. Micron upgraded to buy from hold at Stifel, with the brokers saying that average analyst estimates for 2025 are wrong and too low for the chipmaker. Micron up by about 4%. And chipmaker Broadcom will be reporting today after the close of trade trading, Mizuho Securities has raised its price target on the stock to $15.50 from $14.50. Shares of Broadcom today, they are up now by about 3.6%. And Netflix says social media star turned boxer Jake Paul will fight former heavyweight champion Mike Tyson on July 20th at AT&T Stadium. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. For that, we go to Amy and Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
All right. Hello, Tim. Rate reductions can and will begin this year. That word from Federal Reserve Chair Jay Powell before the Senate Banking Committee, where he discussed a pleasant surprise in the economy.
We were able to get this far and get inflation down this quickly without seeing a big increase in unemployment. And that's just a great result. That's just a surprise. It's not consistent with the historical record, but it's a really positive thing.
Powell told lawmakers the central bank was not far from being able to cut interest rates. Sweden has formally joined NATO as the 32nd member of the alliance. Sweden's prime minister will be a guest of honor at tonight's State of the Union address. President Biden is directing the U.S. military to establish a temporary port on the Gaza coast to ease the humanitarian crisis. He is expected to make that announcement during tonight's State of the Union. Democratic Congresswoman Abigail Spanberger says she'd like to hear the president speak to some issues that are top of mind for voters.
Specifically abortion rights and reproductive rights. I want to hear him talk about fentanyl and the immigration challenges, the need for border security and immigration reforms.
Democrat Abigail Spanberger is also running for governor in Virginia. Join Bloomberg Radio and Television tonight at 8:30 Wall Street time for special coverage of the State of the Union. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Back to Carol and Tim on Bloomberg Business Week.
All right, Amy Morris, thank you so much. All right, let's get to our one more thing. We were just talking about South Miami, South Florida real estate, Miami area really specifically, and it seems to be, as she said, caliente, so pretty hot. So it's interesting to hear what she said. But with that in mind, a story that's actually from the Wall Street Journal caught our attention about a really expensive piece of property in Miami.
Okay, so if the sale goes through, it's going to become the Miami area's most expensive home. We're talking about an oceanfront penthouse that's right now in contract for more than $120 million. This, again, according to the Wall Street Journal, citing people familiar with the deal.
Yeah, some that would make it the most expensive condominium, ever sold in the Miami area, according to those. The previous record, by the way, half that price. I always feel like I'm watching a reality show on like those high-end real estate properties, but this one spans 10,500 square feet, around 7,500 square feet of terraces, a private rooftop pool. The identity of the buyer is not known, but it's kind of interesting, and so we'll see what happens.
You mentioned the previous record. Okay, that was set back in 2015. That was when Ken Griffin paid $60 million for a pair of penthouses. He has since sold those units, according to records, for a combined $46.2 million.
Yeah, and it's called the Shore Club Private Collection in Miami Beach. It's a redevelopment. It's been years in the making. They're redeveloping two landmark hotels, circa 1940s Shore Club Hotel and the Cromwell Hotel. It's a 1930s Art Deco building. So some pretty cool things. I guess it's going to have 49 private residents split among all of that space.
Okay, so you don't have to have, tens of millions of dollars to buy something there.
There's a cheaper one?
They range from around $6 million to around $40 million. So
on it.
There's some stuff at the lower end too, Carol.
All right, good to know.
And the project's going to be completed in a couple of years.
It's interesting, but
you're taking notes. I see you taking notes here.
We on a day when we focus on U.S. statistics and what's going on, kind of generally, you really get kind of a view of what are going in some of the really expensive areas of this country.
Griffin, by the way, paid more than $106 million for a waterfront estate in Coconut Grove. That was the first Miami home to cross $100 million.
All right, there you have it.
Yeah.
Some real estate data on this Thursday. All right, everybody. If you're watching on TV, the close is up next. For those continuing on Bloomberg Business Week here on radio, we're going to talk with the author of the best-selling book, Chip War, The Fight for the World's Most Critical Technology. This ahead of Broadcom earnings.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Bloomberg Business Week continuing here on radio, TV, not TV. Whoops, we'll be back to TV.
It depends on if you're watching YouTube on TV, then then it's considered on TV, or Bloomberg Originals.
Yes, we are. So let's be fair. We're everywhere. We're looking at an S&P 500 that's at a record high. This on day 2 of the Fed making some comments, although nothing new, as we heard from our Mike McKee earlier.
It's losing a little steam.
Yeah, what?
It's losing a little steam.
A little bit of steam. A little bit of rolling over.
A full percentage point. But.
Well, you do wonder at some point that investors are kind of looking ahead to the jobs report tomorrow, right? And wondering how that number comes in.
And then, of course, CPI next week.
Yeah, exactly. And don't forget, we've got some earnings. Broadcom after the close. AVGO is the ticker. We'll be all over it. Having said that, this on a day when we got the stocks, too, at a record high.
Yeah, thanks in part to NVIDIA continuing its march higher. Broadcom, as you mentioned, reporting after the bell. We're going all in on chips in just a few minutes. We got New York Times bestselling author of Chip War, the fight for the world's most critical technology.
Yeah, exactly. So much to ask him. Also at a record, shares of Novo Nordisk, thanks to the Ozempic maker releasing promising data, specifically on an experimental daily pill for weight loss. So we're going to dig into that one as well.
And it's not just Super Tuesday this week. We're going to get a preview of tonight's State of the Union from our chief geoeconomics analyst.
Yep. And how about some wine?
Yeah.
It's not Friday, but it's Friday's Eve.
That's fine. That's fine. It's always fine for wine.
The editor-in-chief of Wine and Spirits stopping by to give us an update on what's hot in the wine world. Really also a great look at what's going on in restaurants, which is another great economic indicator.
Here's a preview.
What?
Azores.
Let's go.
That's where some hot wine is right now.
All right, we're going to be maybe doing some sampling. All right, first up, let's get a sampling of the market. Some of your big stories. Here is, let's get Charlie Powell.
Hi, thank you very much, Carol. Indeed, the state of the market right now, higher. Dow, S&P, NASDAQ, very much in the green. Could see a record close on the S&P 500 index. The number that people are looking to take out for the bulls would be 5137. That is the current record on the S&P right now. We got that index at 5150, up 45 points again, a gain now of about 0.9%. Dow Jones Industrial Average also advancing up 75 right now, up 0.2%. NASDAQ Composite Index higher by 1.4%. 10-year at 4.09%, with a 2-year at 4.51%. Spot gold up 0.5%, $21.59 the ounce on gold. And West Texas Intermediate crude oil is lower now by 0.3%, $78.86 for a barrel of WTI. Bottom line here, Wall Street is looking ahead to tomorrow morning's jobs report and how it helps determine the path of Federal Reserve interest rate cuts. We've got the S&P again at a record up 47, up 0.9%. Some of the company stories that we're following: NYCB shares up 5.5%. New York Community Bancorp's new leader wants the beleaguered commercial real estate lender to look more like other regional banks. Again, NYCB up today by 5.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Well, as we mentioned, the SOX, the Philadelphia Semiconductor Index, hitting an all-time high today as chip stocks march higher. Broadcom reports after the bell, also trading near records. Carol, at the same time, there are big questions about how chip companies are going to navigate Washington's crackdown on exports of advanced technologies.
That's right. Bloomberg was first to report overnight that the U.S. government is pressing allies, including the Netherlands, Germany, South Korea, and Japan, to further tighten restrictions on China's access to semiconductor technology, a controversial effort that is drawing resistance in some countries. This is at least according to people familiar with that matter, Tim.
So for what we need to know about how companies navigate this delicate balance, we bring in the economic historian Chris Miller. He's Associate Professor of International History at Tufts University. He's also the author of Chip War, the fight for the world's most critical technology. It's a New York Times bestseller. Chris back with us from Boston. Chris, good to have you back. How are you?
Doing well. Thank you for having me back.
Yeah, well, thanks so much for joining us. We always love it when you come on the program. I mean, talk about timing with your book. It came out in 2022. Since then, the euphoria around chips as they relate to AI just has reached fever pitch. I mean, look no further than NVIDIA, supermicro computer, and more. How are you watching this as an academic, as a consultant? What are your thoughts?
Well, you're certainly right that AI has really transformed the chip industry. It's the key demand driver going forward. And the big question hanging over AI is, when will we start to see large-scale monetization? How soon will that happen? and at what scale. Because ultimately, the reason why all the hyperscalers are investing tens of billions of dollars in building up AI infrastructure and in buying lots of NVIDIA GPUs is because they believe there's money that will be made at the end of this process. And that's why questions like, well, how much does Microsoft make off of Copilot, or what does OpenAI's revenue look like? These are the key indicators that investors are looking at to assess what will be the implication of AI for corporate profits.
All right. In the tech world, though, sometimes you got to build it and then they will come kind of thing. Having said that, you've got a SOX, Chris, that was up about 65% last year. And let me just pull it up on the Bloomberg. But you've got the Philadelphia Semiconductor Index up about 23% so far here in 2024. It's just one measurement. Maybe it's not the right one. But would you say that all the enthusiasm has gotten ahead of itself just based on the moves in the share price? Or it's still kind of hard to tell? As I said, you need to build it and then they may come.
Well, I think it does make sense that companies are investing very heavily in this infrastructure, given all of the advances that we've seen in AI and all of the product ideas that are currently being tested and explored by tech companies. And the infrastructure is expensive. There's no way around it, which is why if you're a big tech company, you've got to invest literally tens of billions, or else you fall behind in your data center build out. But the question again is going to be, how long can this be sustained without monetization? And the good news is that there are early signs that it is possible to make money off of AI products. We just need to see more evidence of this at more companies to justify ongoing expenditures at this level.
Well, Chris, how do you distinguish between the names in the space? And when you talk about monetization, NVIDIA is certainly the one that we bring up, right? And their numbers continue to surprise to the upside and give us some of that affirmation, if you will, about maybe the potential for AI. It's not just dreams, it could be a reality because you see it in their numbers. Having said that, go back to distinguishing the names in the space. You've got the once giants or leaders. I'm thinking of Intel, Texas Instruments, the new leaders, NVIDIA, AMD has come so far. The company that seems to stand alone, TSMC, the semiconductor companies, the equipment makers. Like, how do you distinguish? How should the Bloomberg audience be thinking about a space that's got a lot of different names in them?
Well, the good news is that as AI advances, you actually need more types of chips in larger quantities to take advantage. It's not just the AI processors that you need that NVIDIA produces, it's also more memory, especially the high bandwidth memory produced by companies like SK Hynix or Samsung. And you also end up needing more mixed signal and analog chips, because these are the chips that collect the data that's then being processed by AI systems and semi-autonomous cars, for example. So that's why the boom in AI has benefited most companies in the industry, even if they're not directly producing the GPUs that are at the center of AI. And it's also why it's not just the chip designers themselves, it's also the tool makers from ASML to Applied Materials that are benefiting as chip making companies buy even more tools. But ultimately, all of these do depend on their end customers continuing to invest in more and more semiconductors. And that's where the capital expenditure decisions of the big tech firms, Microsoft, Google, Amazon, and others, will be key to sustaining this level of investment going forward.
Chris, I want to go back to monetization, and I'm so glad you brought it up because it's something that we talk about a lot. We understand the beneficiaries on the chip side of AI, but at the same time, we do see company stocks near all-time highs for companies investing in this type of technology, including Meta Platforms, Microsoft, on the private side, OpenAI, and others. What are the indications to you that we are seeing monetization at this point? And when, in your opinion, do you think we're going to start seeing real efficiencies as the result of AI?
Well, I think the good news is that if you look across a much broader cross-section of companies, take the Fortune 500 in aggregate, most companies on that list are at least exploring ways that they can use AI either to refine their products or to drive down costs. And so the key is not going to be, I don't think, any individual company or even any individual sector. It's going to be, can many different sectors learn to apply AI for many different use cases? And that makes it harder to measure. But it also makes AI probably more sustainable in the long run if it's not one or two killer applications, but rather lots of uses that end up being accretive either to companies' profits or to driving down their costs. But for investors looking at the space, trying to understand how real is this and how sustainable is the investment, it means you've got to look at a much broader cross-section of companies to ascertain where is AI actually gaining traction.
And how do you roll into something like, Apple's making chips, Microsoft, Alphabet, Google, right? Like, it's just kind of getting crowded, more crowded, if you will. I mean, how do you roll those guys into the already established players? Do you see them in the near future or in the longer term as being really pretty formidable in this industry?
Well, I think they are in some ways already competitors to companies like AMD or NVIDIA, and companies that are big enough to have scale in the data center business, like those that you mentioned, have a strong incentive to design their own chips, both because they can hone their design so that they specifically match the workloads that those companies are running in the data centers, but also because the more choice they have, both in-house designed chips and externally designed chips, the more pricing power they hope they can win vis-a-vis their biggest suppliers, companies like NVIDIA, for example. And so there's a market rationale as well as the technical rationale for companies to design their own in-house chips. And what we've seen, as you said, is a trend where almost every big tech company is now designing not just often one chip for themselves, but multiple different types of chips for their own data center efforts.
We want to move on to the actual chip war, which is what your book was all about, because we feel like it just is picking up tensions. But before we do, which among the semiconductor companies that are out there do you find most interesting and that you think we must, I think about the investing audience of Bloomberg, must always keep on your radar?
A lot of people who are only paying attention to this space and alongside the rest of the tech sector don't often focus enough on the tool makers, the companies that make the tools that make the chips possible. But if you look at the extraordinary growth in the industry over the past several years, it's not just the chip designers like NVIDIA or AMD, it's also the companies that produce the tools, ASML or Lam Research or Applied Materials, that are benefiting just as much from a lot of the growth in this industry.
Okay, so you mentioned ASML, so we're going to talk about related to that company, some of the tensions that we reported at the top. The U.S.-China battle for tech supremacy. Chips are certainly at the top of the list. AMD hitting a roadblock this week because of U.S. rules. Take a step back and just give us your impression about why the U.S. is now pressing allies to make sure that China doesn't get its hands on certain types of chips. Like, big picture, what's worst case scenario here? Like, why does the U.S. and its allies want to keep China from getting this technology?
The U.S. strategy, I think, is pretty straightforward. And the dilemma the U.S. faces is this. By any metric, China will quantitatively outproduce the U.S. in terms of military systems, whether it's ships or missiles or drones. China already has more, and it will have even more of a quantitative edge in the future. And so the U.S. is hoping it can retain its qualitative edge in terms of defense and intelligence systems by applying advanced computing and AI to defense. And doing so requires having better advanced computing and better AI than China. And that's at the core of what the U.S. is trying to accomplish here. It's laser focused on AI chips and the machines that are capable of making cutting-edge AI chips with the aim of restraining the growth of China's AI ecosystem and keeping a technological edge that the United States has had for the past several decades.
Well, having said that, too, with that in mind, and I keep thinking about TSMC, the ultimate fabricator. I mean, people can design chips, but ultimately they go to TSMC to make them and spit them out. How critical is it for the United States or other countries, to back off of their dependency on TSMC?
Well, I think you see a lot of interest in the U.S. and Europe and Japan and elsewhere to have a more diversified manufacturing footprint, which is partly why TSMC is building new plants in the U.S., in Japan, and in Germany. But the reality is that when it comes to AI processors in particular, like the GPUs that NVIDIA makes, almost all of them are manufactured by TSMC in Taiwan. So thus far, we haven't actually seen much diversification, at least when it comes to these ultra cutting edge chips.
So how critical is it then for the U.S. to reduce that dependency?
Well, I think you see the United States spending a fair amount of money trying. The CHIPS Act is going to spend $40 billion precisely on incentivizing firms to build factories in the United States, and Japan and Europe are doing the same thing.
Does it go far enough here in the U.S. because we have seen some prominent players pull back on and scale back on some of these plans in the U.S.?
Well, I think it's never going to be easy to see supply chains shift in a big way over a short period of time. The chip supply chain and the role of TSMC was built up over many decades, and so it's just implausible to imagine the shift is going to happen quickly. And it's not going to happen quickly, both because it's hard and slow, but also because the reason TSMC has such an entrenched position is because economies of scale have given it a technological edge. And so it's not just about any individual type of technology or subsidies for any individual factory. It's the entire business model that gives TSMC its position. And that's why TSMC is going to be very hard for any of its competitors to dislodge at the top of the foundry market, and why I really think most of the industry is expecting TSMC to remain the dominant player for a very long time to come.
Is it realistic to think that if the U.S. is successful in cutting off this technology to China, that China will not develop this on its own? I mean, after all, last August, we got the news that in this Huawei phone, there was a chip developed that was more than a generation